So good morning, everybody. Welcome to our meeting in Zurich. For those that were around yesterday, we benefited from a very interesting outreach session hosted by the Canton of Zurich and the Zurich University of Applied Sciences. So thank you very much to everyone who participated in that, and also to Claudia and colleagues and Andreas's team at the university for all the hard work that went into organising what I think was a very interesting day. And certainly I got some different perspectives on our new standards, IPSAS 47 and 48, and I think that practical insight was very, very useful. So I think without further ado, I'm going to hand over to our hosts and to ask the Minister if he would make a few introductory remarks. So, Minister, if you would take the podium.
Dear Chair, dear all, good morning. Ich freue mich, dass das IPSAS-Board für sein Meeting wieder in den Kanton Zürich gekommen ist. Das letzte Mal war es 2008 der Fall. Ich hoffe, dass die Teilnehmenden am Erfahrungsaustausch gestern einen schönen Tag mit inspirierenden Gesprächen hatten und sie sich gut für die anstehende Meetingwoche vorbereitet haben. Für die nächsten 4 Tage geht es also nun an die eigentliche Arbeit. Die Diskussion und Verabschiedung verschiedener Klärungen und Präzisierungen am IPSAS-Regelwerk. Diese Meetings sind für den Kanton Zürich von großem Interesse, denn die Standards knüpfen an sehr handfeste und konkrete Fragen und Herausforderungen an. Lassen Sie mich das für den Kanton Zürich anhand von 3 Sehenswürdigkeiten oder Institutionen illustrieren. An erster Stelle möchte ich den Zürichsee erwähnen. Der Zürichsee ist nicht nur ein großer Tourismusmagnet für sportliche Aktivitäten wie Schwimmen, Segeln oder Rudern. Er ist auch das größte Trinkwasserreservoir des Kantons. 40% des gesamten Trinkwassers im Kanton Zürich werden aus dem See entnommen. Wie alle Gewässer auf unserem Hoheitsgebiet befindet sich der Zürichsee im Eigentum des Kantons. Bisher erfassten wir bei den Rechnungslegungen lediglich anfallende Unterhaltsarbeiten, wie beispielsweise die jährliche Reinigung des Sees von Unrat. Das Konsultationspapier zur allfälligen Bilanzierung von natürlichen Ressourcen, das diese Woche auf Ihrer Traktandenliste steht, ist daher von direktem Interesse für uns. Das zweite Beispiel ist das Grossmünster, das heißt die schöne Kirche in der Altstadt mit ihren 2 Türmen und spitzen Kuppeln. Das Grossmünster ist das Wahrzeichen der Stadt Zürich und eines der wichtigsten Kulturgüter im Besitze des Kantons. Mit der Einführung von IPSAS hat der Kanton das Grossmünster wie alle wesentlichen Kulturgüter nach den damals geltenden Vorschriften bilanziert. Das heißt, er hat die Investitionen aktiviert und den Unterhalt in der Erfolgsrechnung abgebildet. Da die Nutzungsdauer nicht bestimmbar war, wurde die Investition im gleichen Jahr zu 100% abgeschrieben. Mit IPSAS 45 zu den Sachanlagen liegt jetzt seit diesem Frühling erstmals eine einheitliche Regelung zur Rechnungslegung von Kulturgütern vor. Damit stellt sich für uns die Herausforderung, die Nutzungsdauer von Kulturgütern zu bestimmen. Hier werden wir gemeinsam mit der Wissenschaft und Bauspezialisten Modelle entwickeln, auch für das Grossmünster. Als letztes Beispiel erwähne ich den Flughafen Zürich. Die meisten, wenn nicht alle von Ihnen, dürften über den Luftweg nach Zürich gereist sein. Der Flughafen war bis 2000 Teil der kantonalen Verwaltung. Heute ist er eine börsengehandelte Aktiengesellschaft. Der Kanton hat eine Sperrminorität von 33% und stellt 3 Delegierte in den Verwaltungsrat. Die Beteiligung wird aufgrund der volkswirtschaftlichen Bedeutung des Flughafens im Verwaltungsvermögen geführt. Der Standard, der in diesem Fall von Interesse ist IPSAS 46, der diese Woche ebenfalls am Meeting besprochen wird. Er unterscheidet die Methoden zur Bewertung von Vermögenswerten erstmal auch nach ihrem Zweck. Mit dieser Unterscheidung könnte die Flughafenbeteiligung nun basierend auf der bestehenden Nutzung bewertet werden. Sie sehen verschiedene laufende Diskussionen betreffend die Finanzdirektion des Kantons Zürich sehr direkt und konkret. Daher verfolge ich Ihre Tätigkeit mit Interesse und werde mich nach dem Meeting von Claudia Bayer über die Ergebnisse orientieren lassen. Meine Damen und Herren, das IPSAS-Regelwerk ist für Staaten, die es anwenden, von großer Bedeutung. Es stärkt die Transparenz, die Verlässlichkeit der Daten und fördert somit das Vertrauen in die Tätigkeit der öffentlichen Hand. Der Kanton Zürich steht zu IPSAS und einer weltweit einheitlichen Rechnungslegung. Sie fördert das gemeinsame Verständnis über die Landesgrenzen hinaus, was wir als weltoffener Staat schätzen und unterstützen. Die Standards erfüllen ihren Zweck umso besser, je mehr Klarheit sie aufweisen, je mehr Hilfe sie bei der Lösung von konkreten Herausforderungen bieten. Um Klärungen und Präzisierungen geht es an diesem Meeting. Es dient somit dazu, die Standards noch besser auf die Anforderungen der Gegenwart und der Zukunft auszurichten. Ich danke Ihnen für Ihr persönliches Engagement zugunsten von IPSAS und wünsche Ihnen, insbesondere auch Ihnen, Dear Chair, viel Erfolg und alles Gute. Thank you.
So thank you very much to the Minister for those opening remarks, and I think very importantly linking what we're discussing into the practicalities and the realities of financial administration. And what I'd like to do before we head into the formal business of the meeting is to hand over the plaque which we give to all our hosts to record our thanks for hosting us at the meeting. So we'll do that at this stage, and I think we'll be taking a photo.
Oh.
Yes, thank you. Thank you very much. Okay, so thank you very much, the Minister, and we will see more of Basilius, who is Claudia's boss, shortly. So once again, welcome everyone. I think it's quite a moment for the board in that this is the first time that we've actually had all 18 board members together in the same room since December 2019. That was the last meeting before we started to be impacted by the pandemic. So it's taken us this long to finally get everybody back in the same room together. So thank you very much, everyone, for making it. And a round of applause, I think, for everyone actually being here. And it is really fantastic to see everyone in person. So thank you very much. Also, I would like to extend a welcome to somebody who is very much no stranger to this board, but for the first time, Anthony Heffernan is here as a staff member. So, Anthony, welcome, and we look forward to working with you on the staff. So, with that, we then move into the agenda in terms of the minutes from the June 2023 meeting. Are there any final comments on those? Not seeing any flags raised, so we approve those minutes. Then we move into the minutes from the July virtual check-in meeting. Again, not seeing any flags raised, so I think we approve those. And then that moves us into the next item, which is the update on European Public Sector Accounting Standards programme. And I'd like to welcome Peter Lima. Peter, for the first time, we welcome you as the deputy in terms of the programme. So welcome, and we look forward to hearing what you have to say, because we know there's a lot going on at the moment. Over to you, Peter.
Thank you. Good morning. So there should be slides as well. Okay, thank you. Okay, good morning, and I'm Peter Lettmann from Eurostat, and I'm happy to give you an update on European Public Sector Accounting Standards, or IPSASB. Okay. So it's not moving. It's better to switch on. Very good. Thank you. Okay, next time I should know. Okay, here is the outline, and which includes 3 items. So the first item addresses the work that we take forward in the context of the IPSASB expert group. And not as a surprise, the second item is about EU economic governance review, which is in our case mainly it means the recent Commission's proposal on budgetary frameworks directive that covers also public accounting. And then I will provide some information on sustainability reporting under the third item. Now moving on to the IPSASB expert group meetings this year. So many of you know that 2 of those groups meetings are held in a year, and the last one was held in May. And the next one will be in November this year. And the first and the last bullets represent standard agenda items, and I'm not going to stop on those for any longer here. So in May, we concluded the discussion on IPSASB reporting entity definition, which is part of draft IPSASB conceptual framework. And I will show you a chart on the next slide on that. And I will show also you a slide on potential future IPSASB structure that we will continue discussing at the November meeting. At that meeting, we will also present an update of draft IPSASB conceptual framework. The latest available draft of this is available from May 2018. And the updated draft will address the developments in public sector accounting since 2018, including your work here at the board on the IPSASB conceptual framework. Now I move on to this slide on IPSASB reporting entity definition. So it contains some details, but I'm not going to go on all the details. So what it does, it basically depicts the perimeter of entities that are expected to prepare IPSASB financial statements. So it takes statistical public sector boundary, which is ESA 2010 in Europe. And as the starting point, and then applies certain exclusions, such as for corporate entities that are already on accruals. And now to the next slide, which is about potential IPSASB structure. The potential future IPSASB structure includes 2 main aspects: the structure of potential future set of IPSASB, and then also the potential structure within future individual IPSASB standards. So this slide shows the envisaged future set of IPSASB. As you can see, it groups together accounting areas that are naturally related in terms of the type of issues they cover. This is in contrast with the IPSAS approach of adding new standards sequentially. And now I come to the economic governance review. The first two bullets present the objectives and principles of this review. And in April this year, the European Commission published its proposal for a package of legislation. The important part for us is the Budgetary Frameworks Directive from 2011. And the parts relevant for public accounting in this directive ask the member states to have in place nationally harmonized public sector accrual accounting by 2030. So the current directive doesn't include such a requirement. And then the second bullet at the bottom of the slide is that the proposal also asks the Commission to report by 2025 on public sector financial accounting in the EU. So the negotiations are currently ongoing within the relevant bodies of the European Council. And I would like to stress here that the proposed amendments do not seek to introduce harmonized European standards, which is the work of the IPSAS project. Instead, the proposal in the directive calls for nationally harmonized accruals-based public accounting standards, meaning without EU-level harmonization. So the two processes, meaning directive, IPSAS, are related, but they are not the same. And finally, a little bit about the EU sustainability reporting. Okay, the first thing is that sustainability reporting is not part of ongoing IPSAS work. But I would like to recall that in July this year, European Commission adopted European sustainability reporting standards for use by companies. And that Eurostat also supports sustainability by monitoring progress towards sustainable development goals using statistical data. So there is a website link there as well. So that was all from me. Thank you very much for your attention, and I'm happy to take your questions. Thank you.
Thank you very much, Peter. A lot's going on, I think, an important period in terms of the IPSAS project, and you can see a lot of shape there in terms of potential outline of the future standards and so on. Questions from members at this stage?
Please go ahead.
Liang, lead us off.
Thanks for your impressive presentation. Actually, I have a question about the sustainability reporting. You just mentioned the CRDS. I just wonder whether those public sector entity will apply these new rules.
So these, when I mentioned these new standards, so these are for corporate entities. Of course, they could be also public corporations as well, but normally they are any kind of corporations, and in particular, they are large corporations and listed corporations.
Okay, thank you.
Other questions? Mari.
Thank you so much for your presentation. And I would like to ask you about the relationship between the sustainability reporting and financial reporting. And they are another set of the reporting. And however, the sustainability reporting target is a long-term perspective, and the financial reporting is a short-term, 1 year or so. And so how to connect the sustainability financial reporting with the sustainability reporting. How to connect the financial reporting with the sustainability reporting? I wonder. Thank you.
That sounds like a very fundamental question, yeah, maybe philosophical. I'm not sure I'm able to give you answer on this very fundamental question. But in any case, the sustainability reporting is aimed at to support the environmental concerns and the environmental aspects also in connection with the European Green Agenda. And I think, let's say, these two aspects, the financial reporting and this Green Agenda, they are in Europe very much linked. So that is my answer on your question.
Thanks, Peter. And it's worth noting that the ESRS have been developed by a new committee of EFRAG, the European standard setters, so or endorsement mechanisms. So there is intended to be at least some connectivity there, but you have the inevitable challenge of two different groups working on financial reporting and sustainability reporting. So I'll go around the table. So if I go to Camira first and then Todd and Scott.
Thank you, Chair, and thank you, Peter, for the update. I just had a clarification question. When you mentioned that by 2030, member states will have to have nationally harmonized accrual financial reporting, what will be the role then for IPSAS? Does it mean that the member state will be allowed to adopt directly IPSAS or EPSAS, or do they have the choice to decide which framework will they use, or yeah? So a bit, if you could elaborate a bit more on that, thanks.
Okay, so this proposal in this for the budgetary frameworks directive, it concerns only national accruals. So there is no European harmonization. As I said, you know, of course, EPSAS is towards harmonized accruals. So these two processes are linked, but the aim in the proposal of the directive is not to have European harmonization. So yeah, so there is and for example in this proposal, it doesn't require application of IPSAS, implementation of IPSAS. So there is no any this kind of benchmark or standards foreseen. So it's sufficient to have national accrual standards. Thank you.
Thanks, Peter. Todd, then Scott.
Thanks, Ian, and thanks for the presentation. As a board, we are very interested in sustainability reporting. It's on our agenda for the meeting this week. And I just didn't want to lose the opportunity to learn a little bit more about the European sustainability reporting standards. So just interested in any observations you have in terms of the development of those standards. It seems that they're in a similar space probably to what the IASB is, because they've set some standards in the space for the more corporate end. And so I just want to have a bit better understanding, if you have that, around sort of the process, what it covers, that sort of thing, if you know.
Thank you for this question. Okay, first of all, what I said at EPSAS, we're not. This is not part of our EPSAS work. So, and just to keep this the participants here informed, I provided this as background information. But honestly speaking, I'm not personally very much aware of this work, so which is carried out by another part of the European Commission. So I'm afraid I'm not able to give you, let's say, more detailed information than what is publicly available that you can find on internet yourself as well. Thank you.
So thanks, Peter. I mean, I think from discussions that we've had with Rosa's team, at the moment, there are no plans for public sector bodies in the EU to move towards sustainability reporting standards. As Peter has said, the ESRS have been set with a private sector perspective in mind. And that's effectively the limit of where we are at the moment. Rosa, did you want to make a comment? You just come and use the microphone.
It's okay. I would like to confirm what Ian has explained. There is not for the moment plans to do something on the sustainability reporting enforcement for all the member states. But at the same time, as an institution, we are trying to give more and more information on the things, on the topics as climate change. It's not real as sustainability reporting, but we are taking a lot of steps to give much more information about our budget. And that is what the teams are discussing also with the IPSAS board staff. What are the main areas that we would like to put the accent? And I have to say that in the European Parliament, they are pushing a lot in this area. And we are trying to improve each year in the kind of information that we are giving on biodiversity, on climate change, and other kind of expenditure. Thank you.
Thank you, Rosa.
Yeah, thank you, Rosa. That's helpful. Scott, you wanted to come in.
I just pulled my flag down because I think that answered my question. My question was more long-term perspective, whether they were going sustainability. It sounds like the answer is no.
Okay, Abdullah.
Thank you, Peter. And it's not a question other than wanted to hear from you. Where can we help you here as IPSAS board members? Is there anything that we can help you with in your work? We would want to hear from you about what we've been doing. Are we going too fast? Are we going at just the right speed? Is there anything any gap that you would see that we work on to help your work?
Thank you very much, and thank you very much for your kind concern and for your being very thoughtful. So, in fact, we are already very closely cooperating with IPSAS board, and for example, Ian is attending all our IPSAS expert group meetings to keep to bring information on the IPSASB work to our group, and then also, of course, taking home from Europe also what's going on in Europe and introducing, let's say, this kind of work in IPSASB agenda whenever necessary. So we are already, I must say that we are completely happy with this very good cooperation that we have already with IPSASB. Thank you.
Yeah, thank you, Peter. And I think it's fair to say that over the years, as the IPSAS program has moved forward, actually, we've had a lot of very useful feedback on our standards, particularly through the screening program. And that's enabled us actually to bring improvements and address issues as we've gone along. So I think it has been a very constructive dialogue. And I think one of the major achievements has actually been through the program that the European public sector accounting profession actually has a voice and a forum for discussion, which has been tremendously helpful. Lucy.
Yes. Thank you, Chair. Thank you very much, Peter, for that very informative presentation. You have mentioned that as part of the EU's economic governance review, the EU is intending to, by the end of 2025, to report on the status of implementation of IPSAS and even the future direction of the public sector financial reporting in the EU member states. I would like to link that to your document on the that was issued in 2017 on the first time adoption of IPSAS. The board, the IPSAS board is planning to work on updating IPSAS 33 also. Do you see any opportunity for the EU to also revise the document that you issued in 2017? That would also help the first-time adopters, EU member states. Thank you.
Thank you for this question. So the honest answer is that we haven't foreseen yet any update of this document. But while saying this, clearly, in order to apply IPSAS, there should be a at the political level agreement on that. And so far, there hasn't been a political agreement at the EU level. But what we do is that the college, the European Commission, will change in 2024. And then what we do is that we prepare a handover of what we have done so far to the new Commission to potentially go forward at the political level during the Commission's next term. But it's indeed very much linked to the political agreement on moving on with IPSAS. Thank you.
Thank you. I think it's worth noting from the board's perspective that the 2025 report that Peter referred to, I think, will include an update on the status of IPSAS and IPSASB, you know, an update to the original assessment, I think was done back in 2012, wasn't it?
Yes, it was published March 2013.
Yeah.
Indeed. And it will also, let's say, be follow-up of this Commission's report that was issued in 2013, indeed.
So that will be an important, from a board point of view, obviously, because it's an independent public assessment. And I think there'll be a lot of changes to report, if you like, since 2012.
At that time, it was referred to as on suitability of IPSAS for EU. Yeah.
Okay, so thank you very much, Peter, for that update. I think it is a very important period for the IPSAS programme, and I think we look forward to further updates as that discussion goes through in terms of the economic governance package and you know, matters to do with that. So thank you very much for that.
Thank you, Ian, and thank you, everybody. Thank you.
Okay, thank you. So with that, we come on to the final items on the opening item, and just to say, obviously, alignment dashboard, both for IPSAS, IFRS, and ISS. Those are both important from the operational point of view for staff, and keep a close eye on that. So if there are any questions on that, please direct them in Joao's direction. Joao is very much the dashboard meister. And in terms of the final item, thank you very much again for a lot of outreach that's been going on. I think it's always very interesting when you look through that report, you see the range of what's being done by board members and technical advisors. So thank you very much for all of those activities. That brings us to the end of item 1, and then in terms of moving into the next item, we have the implementation update, and that is from colleagues in the canton of Zurich. And Claudia, we're in yours and colleagues' hands for that. I think there'll be a number of presentations, potentially, I think, with an opportunity for questions after each of the short presentations. So Claudia, over to you and your team.
Dear Ian, dear board members, and TAs, ladies and gentlemen, a very welcome to the Canton of Zurich. We are pleased to change our experience on the IPSAS implementation and using accrual accounting for decision-making with you. The Canton of Zurich introduced IPSAS as part of a major administrative reform. The Cantonal Parliament believed that with a linkage to modern international accepted accounting principle like IPSAS, transparency, reliability, and comparability could be significantly improved in the public sector. It was also expected to have a positive impact on our rating. Before we go into more details, I would like to start with an introduction of our speakers. So Basilius Scheidegger is the head of financial administration in the Ministry of Finance. Then Bettina Simeoni is head of financial planning in the financial administration. Then Corinne Jäger, she is the project manager for the implementation of IPSAS 43. And yeah, I'm the head of the financial accounting reporting when I'm not working as an IPSAS board member. We have prepared a short agenda. At the beginning, I will have an introduction to IPSAS adoption and implementation process. Then it's followed by IPSAS 43. What are challenges will be presented by Corinne. Then Bettina will present financial planning and budgeting process in the Canton of Zurich. And finally, Basilius will give you some of his thought about what IPSAS enable us for as a conclusive public financial management. And you have in between time for questions and at the end, when you hear all of them. I will start with a short accounting history of the Canton of Zurich. Until 1982, we used cash accounting principle. From that on, the Canton of Zurich used accrual accounting principles. And since 2009, we're already using IPSAS as we implemented a new controlling in the accounting law. In this, based on the IPSAS, we have an endorsement process. What it exactly means, we will see. What we have seen in all our history, there was always we using the same accounting principle for budgeting and financial reporting. So that means that the first IPSAS document was the budget 2009. What was the implementation process or the milestones? Since we had from 1995, the parliament started to criticize the government that we used an outdated accounting model and requested adopting private sector accounting standards. So that finalized that in 2000, we get a political mandate for a revision of the Financial Management Act. That was followed in 2003 with a feasibility study, if we could use IPSAS. This result of the feasibility study was positive, which resulted in that we started 2004 with the start of the IPSAS project. 2006, we get the new controlling and accounting law approved by the parliament. What is the foundation for our pathway to accrual? In 2008, we have then put out two regulations approved by the parliament, which specified the IPSAS regulations and give the endorsement way. And we have two restatements issued by the government for starting to the process then coming from our old accrual accounting system to the new.
And 2009, for this year, the first time the budget was approved by IPSAS principal, included in this process. And 2010, we prepared then the first financial statement for the year 2009. So you see, it's a longer journey, 10 years from the beginning to the end. And since then, we are using IPSAS. So what we understand under if the Canton Zurich talks about we're using IPSAS, as I said, we had an endorsement process. That we mean we could have exceptions. What we have 3 exceptions. We used actual IPSAS 1 to 42, and all other new standards we are under review for implementation. And I just give you a flavor of the 3 exceptions which we have from the beginning. One is regarding the definition of a consolidation scope. You will see later on why we have this. So I would just stack that we have some more guidance in it. So we include only in this consolidated statement entity to whom we are paying significant non-exchange transfers, about more than 20 million Swiss francs, and we need a significant control over them. IPSAS 46, as it's connected to the consolidation scope, as we already didn't want to have a full consolidation of a few entities, we decided we keep the investments in the balance sheet at acquisition costs if we held them for operational purposes, or if you use fair value, if we held them for financial purposes. And finally, IPSAS 39, we present all the information relevant to IPSAS 39 in the notes instead of the financial statements, because we had 1 year of delay of implementing IPSAS, because there was a huge discussion in the parliament in 2006 already to 8 in this period regarding which is the right standard for presenting the Swiss pension scheme. And during that time, there were several audit companies, advisors, prepares their views to the parliament. And at that time, there was decided that the international standard didn't accept the specific Swiss system of their pension law. And therefore, we use then the Swiss gap for presenting our benefit obligations, and we kept this exception since then. So what was the result of our implementation process? We had 1 law and 2 regulations established. We had a mandatory use of the chart of accounts. This chart of account is harmonized with all Swiss cantons and communities, with the federation and also with IPSAS. And it's also harmonized with the requirement from the statistical requirements. So we tried to have a full setup for our accounts. We have an accounting manual. This will be revised and improved every year. So this is really the handbook for all of our accountants. And we prepare consolidated financial statement, and we're using this consolidated statement, we will hear later on for what, and using the SAP. What was our experience? You can't do this reform only if you have support from the top management. And we learned it's better to communicate more than too little, and keep it simple as possible. Training is important on all levels. It means accountants, controller, head of departments, the politicians, etc. Keep as straightforward as possible in your project, and be sometimes pragmatic versus perfect. and use really the materiality in accounting and presentation. Try really to use the understanding of not omitting or misstating, obscuring information, but simplify sometimes if it didn't have any impact to the result. That keeps really the system possible and workable. Yeah, and probably all of you know preparation of data is very time consuming. So make sure you have enough time for this process to ensure good quality. So probably Abdullah has already talked us last time about this. So that was just a very short introduction about implementation of IPSAS, which was a long time ago. So do you have so far some questions?
Thanks, Claudia. Yes, the answer to that is yes, as I see Scott and Andrew want to come in, and then Adrian. Okay, Scott, to you.
Yeah, thank you, Claudia. Very informative. There's always some consistency anytime we hear this, but understanding we have a differential reporting coming up on our agenda, I'd be very interested if you could spend a minute on the pragmatic materiality. How did you actually, I'd say, educate, train? It's one thing to say it, it's another thing to get it in actual practice. How did you actually get people with that mindset that being practical is okay? Because accountants tend not to be that way.
We tried to include in our handbook some guidance because we have reviewed over the time, more than 10 years now, all process, all programs, every expenses, and find for each of them more or less solutions. It is a mixture, our handbook, between principles from IPSAS and some illustrated example in these cases. We have every year 3 conferences with all accountants giving updates, what we change in. If we have major updates, because new IPSAS standards have to be implemented, then we have additional meetings. We have researchers in before. For example, when we moved to the new financial instrument standards, we talked to all of them who granted loans. What are their loan programs? So at the beginning, I say just pragmatic. It's just, I wasn't there at the beginning, but was one of the advices what the Zurich government or the head of financial administration and the former finance minister give the colleague to Austria. And I know this from, because they're still, you have the records, and it means sometimes start. And if you find out you have be wrong, then correct them. But don't be have in your mindset and don't expect from your colleagues they will be perfect from the day one. And materiality, I mean, make sure that you only collect material information, especially financial instrument. Don't try to present it like in a private sector company. You are different. What is relevant for your view of a government, like risk management? It's probably different in the public sector than maybe in the private sector.
Thanks, Claudia. Andrew.
Thanks. Perhaps following on from Scott's question a little about the pragmatic and that your exceptions that you've got there on the consolidations, the sense I got, Claudia, is they were more made from a materiality or a cost benefit analysis perspective rather than a fundamental disagreement with the principles of consolidations. So just to clarify if that is the case, and if that is so, you say you're looking at sort of the endorsement or adoption process of the newer standards, and it might be too early to say, but do you think there's any sort of cost benefit or those sort of materiality constraints that you see you're going to apply to the adoption of the newer standards, perhaps particularly in the leasing space?
You will hear how far we are already with the leasing. So, and I will not answer the question regarding the consolidation scope. It has nothing to do with materiality, but it will be explained later on from Bettina and Basilius, how we use our financial statements and how we use our budget, and how then you probably understand why we come to this conclusion.
Over here, Adrian.
Thank you. Thank you for the beginning of that presentation. We understand that there will be other presentations, but I'm trying not to anticipate too much on the future presentations. I would like to go back to the very source of the project. As I understand it, in 2000 or maybe earlier, you had complaints from Parliament, as you said, complaints from Parliament that the accounting framework was outdated, okay? Being outdated is not per se a defect or an outback. I mean, it has not, if it's only outdated because you refer or you put it against a trend, then outdated is not very, very useful for reforming a whole of a framework. It's only if it does not meet expectations that it could be, I mean, qualified as outdated. So what were the Parliament's expectation at the time? How did you analyze their expectation? How did you qualify their expectation? Were they clearly worded, expressed by the Parliament? I mean, the final users of your financial statements. And the second question, of course, is has the reform, has the adoption of IPSAS helped meeting the expectations of the Parliament? And how do you know that you currently are meeting the Parliament's expectations?
So Basilius will maybe give you some insight how it's today. From that time, what I heard was there was one of the issues were what is the tax revenue? We didn't have a fixed asset register. We just have investments, and then we have a depreciation over the total amount, one amount in the balance sheet. This was one of the critical, where I say, okay, we have now a modern system, bookkeeping system, calculation. And I think there was some other issues, and we're starting to reform, especially this topic comes to bottom. So really, they understand, the majority of our parliamentarians come from the private sector. So there was a development during that time in the private sector to improve their accounting systems. Their IFRS was developed, Swiss GAAP FAIR, I would develop later on. So there was also a change in the private sector, and then the government stuck with an older model. So they feared they wanted to be a more modern government, have some actual data, or at least I think the tax point was one of the critical issues, the calculation of the taxes every year. And since the model is included, we still have some discussions, but on a different level, I would say.
Okay, thank you. So with that, shall we move on to Corinne?
Yes, thank you, Claudia. I'm very pleased to be here today and tell you something about the challenges when implementing IPSAS 43. So I work in Claudia's team, and I often deal in my daily work with questions around application and interpretation of existing standards that we already adopted. But in addition, occasionally I'm involved with the implementation of new standards. So this means that whenever you issue a new IPSAS standard, my heart beats a little bit faster. Not always out of pure joy, but just because I know that there will be a lot of work. And so just to give you a quick overview, we've heard that our accounting is based on the Controlling and Accounting Law, the CRG. And so when you issue a standard, we start with analyzing the potential effects of the standard on the Canton of Zurich. And that's where we're at the moment with IPSAS 43. Once we've done that, we should be able to give a recommendation as to whether to apply the standard or to have an exception. If we apply the standard, there will be a change in the RLV, that's a regulation that's based on the law, because the standard is then listed in this regulation, and this needs to be approved by the Government Council. If we want to have an exception from the standard, this exception is listed in the RLV, and the Parliament needs to approve this exception. So now we're still analyzing the effects of IPSAS 43, and in the first step, we asked ourselves the following questions. So quite simple. So what types of leases are there in the Canton of Zurich? We assumed that the majority would be property leases, and only a small part would be like furniture, office, IT support systems and stuff. So majority would be property leases. But we also didn't know exactly the types of internal sublettings that exist. And we also didn't know exactly how many contracts there are involved. And we only had little knowledge about how these leases are structured in terms of content, duration, notice periods. But since the majority of the property leases, they were centralized a few years ago. So basically, more or less all rental contracts are now entered into by just one office within the Canton of Zurich. So we hoped to get an answer on these three questions relatively quickly. And this was actually the case. So this centralization process, which caused some resistance at the time when it was implemented, it now proved to be quite helpful. And then we also wanted to know how big the expected impact would be on the balance sheet and the income statement, and how that would change our key figures. And in the end, and this was the point that proved to be particularly challenging, was what are the legal requirements around leases? So we had to analyze which provisions already exist regarding lease agreements. So we started working on these questions, and it soon became apparent that the following challenges awaited us. So it was a key requirement that our performance indicators, that they remain meaningful and comparable with other cantons. So that was a challenge. And then the next challenge was around the legal compliance that I mentioned before. So in the Canton of Zurich, the Canton of Zurich has determined who can decide on which expenses. And Bettina will tell you a little bit more about that later on. But in short, there are different types of expenses, and depending on the type and amount of the expense, either the Government Council can approve the expense, or it is the Parliament who has to approve the expense. And until now, it has been explicitly stated in the law that finance leases are to be approved differently than normal rental contracts. So the question was now, how would the legal basis need to be adapted after the introduction of IPSAS 43 in order to retain the same competencies, but without using the term financial lease? Then there were some cost-benefit considerations in the next challenge. So the question was how much manpower was required during the implementation, but also afterwards. And will there be need for an IT solution to deal with the leasing contracts? I'm coming to the next point about the public sector accounting standards in Switzerland. So in the Swiss accounting standard for public entities, this harmonized accounting model, leasing is not treated according to IPSAS 43. And the question was, how can we stay committed to this harmonized accounting model even after implementing IPSAS 43? So this involved also discussions with other IPSAS users within Switzerland. And connected to that is the last challenge here. Annually, we provide the Confederation with financial information for statistical purposes, and we have not yet received any information on how to reflect IPSAS 43 in this information that we have to submit. So although we have not yet mastered many or most of the challenges, we have already been able to find some answers to the questions. So we've found that the majority of internal sublettings are actually not based on a standard contract in the sense of IPSAS 43. However, after yesterday's outreach event, when we discussed what a contract and the binding agreement is, I'm again confused. But furthermore, we currently assume that a significant proportion of our external leases would not be qualified to be a lease under IPSAS 43 just because of the characteristics, the lease term and the notice periods, but there will be still a large number of leases that remain. And in order to record or to account for these leases, process changes would be required. So far, the financial leases, they were assessed centrally within our accounting department for the whole canton, and that would not be possible anymore because there's too many. And also we couldn't handle them in Excel anymore, which was the case so far. It was possible with the number of financial leases we had so far, so that would not be possible anymore. The financial consequences on the balance sheet, the P&L and the key figures, well, on the slide it says negligible. It's probably not negligible, but not as big as expected. So we think that would not be our stumbling block in the end. Going forward, to be honest, we don't know yet what will happen with IPSAS 43 in the canton of Zurich, but we are in the fortunate position that we can take enough time to make our decision. And we will use that time for a further exchange with the other cantons that are applying IPSAS and also with the federal government. They have expressed similar concerns, but then also they have other problems that we don't have. So that's always quite interesting. We probably still have to put most of the work into further analysis of the legal basis. And so the key is really that the responsibilities for expenses in connection with leases, it should not change to the current situation just because we have a new accounting standard. And we cannot work out the necessary adjustments just within the accounting department or just even within the financial administration. This needs to have a broader support within the canton, and that also again takes time. And then, yes, when we have made a decision and it has been approved, we will start with the necessary steps. So either we will include the exception in the legal basis, or we start with the concept phase of the implementation of IPSAS 43. And yes, with that in mind, I'm also curious to see what happens next, and I'm sure Claudia will keep you posted. Thank you.
Thank you very much, Corinna. Very interesting indeed. So open up for questions from members. Oh, Noyasi, and then Kamira.
Thank you, Corey. I just want to ask about the, you said that you have a saying that concept of internal listing, you do not qualify it as a contract because it's one under one entity, right? But is it have impacted on the internal subleasing as well? There is this internal subleasing between between ministries or maybe between the agencies.
Yes, our internal subleases, most of them are in a form where the canton, it kind of gives the other units the right to have a room somewhere within the canton, but it doesn't specify where it is and how long it's going to be and what it costs. So it's a very, yeah, it's not very concrete. It's just like a basic commitment that, yes, we will give you room so that you can fulfill your, whatever you have to do. So that's why we thought, we came to the conclusion, maybe Claudia, you want to add something, that we came to the conclusion that this is not a contract. Yes.
Is there any consideration given between these agencies, or just a free for them to use our nothing?
They have to pay, yes. So there is a rent.
Classified as a rent income.
Yes.
Okay, thank you.
Yeah, I mean, that was one of the examples that we looked at. I mean, obviously defer to Lynn on this, but I know Lisa's task force went through a lot of feedback from people in terms of the types of arrangements. And I think we'll maybe come back to that, because that kind of arrangement is quite common. And we may want to consider some further, implementation examples or something like that. Kamira.
Thanks, Chair, and thanks, Corina, for the presentation. I have two questions. The first question is related to what Noor said. You have already identified a lot of number of leases that do not meet the definition of a contract, so therefore are outside the scope of IPSAS 43. So what will you do with those? Which accounting treatment will you use? Or will you use the accounting principles in IPSAS 13 still? Or do you find that there will be a gap in the IPSASB literature now that many of the contracts that you are currently accounting based on IPSAS 13 will be outside of the scope of the new standard? How will you manage that? And my second question is for the effective date. I see that you will have to go through a lot of process, national, so the laws update, regulations, and so on. Do you think that January 2025 is enough time for you to implement the new standard? Thanks.
So maybe I start with the second question. So no, we won't be implementing as of January 25. That became clear quite quickly that we will need more time. And with the second question, so the existing finance leases, they will fall under the new IPSAS standard. So there is no gap for these leases. And the ones that I mentioned that not to have to be treated as a lease under IPSAS 43, we will just continue accounting for them as we used to, yes.
I would expect we're using just the normal revenue standard because we have income, and on the other side are just expenses. And it's like in the finally are the same contracts like in the private sector out of the revenue out of the lease standard. If you have not specified right to the room, you have only a space but not where. And that's the same like out of scope in the private sector. So, and it's for us, it's the right accounting just to have revenue and expense.
Thanks, Claudia. Abdullah.
Thank you, and would be related to what Camilla said, and thank you for the presentation. I want to acknowledge the process that they are doing. We are doing similar process. Once a standard comes out, there is another work that is happening jurisdiction level. I like the approach you are doing where you analyze the impact on the balance sheet and the income statement, what kind of work, the manpower and sizing of the project. And that is really good even for other jurisdictions when they are trying to apply new standards. It's a good practice that they listen to. And back to the same point, because it is similar to a situation we are at, because it's a common practice for the public sector that they don't have the formality for contracts. So most of the arrangements would be falling under another category, which is going to be for the revenue standard, that we will apply the revenue standard. But from our perspective, we are, because this might be beneficial to other jurisdictions, we kicked in a process, a change, where we just working with other entities to formalize these contracts and having the bare minimum requirements for any assignment, or they are working on assignment or whatever assignment for the real estate or whatever assets they are having. We are forming some type of, before the forms themselves, we are applying some applications to have some sort of contracts where we can apply IPSAS 43. And the timeline for 25, came the same thing. That is the timeline until 25, especially with the introduction of the new standards 47 and seeing the link between the two. But from our side, we try to do some of the work on centralized level, but we could just have a quicker win or quick wins to do it on behalf of entities. Again, thank you for the great presentation.
Thank you very much, Abdullah. Okay, so thank you, Corinne. That was a really, really helpful session. So Bettina, we move on to your session.
Yes, hello everybody, and thank you for having me here. When Claudia asked me to present on this IPSAS board, I wasn't that surprised, because it happens quite often that Claudia or we get a question out of the administration, and it's not always that clear whether it refers to the accounting or the financial law or financial planning processes. So we very often end up discussing the questions together. I'm not an accountant, but the longer the more I'm becoming one. So, but now I would like to elaborate a bit on the financial planning process in the canton of Zurich. Here you can see the yearly process of budgeting and financial plan. In this case, it's the process we run through this year, 2023. And the financial plan is the planning instrument of the government council, whereas the budget is the planning instrument of the parliament. So we usually start in the beginning of the year with the elaboration of the guidelines. The guidelines are top down, so it's basically elements that refer to all the entities that are planning, and we decide, or the government council decides on them in mid-March usually, and this is the basis for the bottom-up planning made by the departments, as you can see in the yellow color, that then follows in mainly April. So that's basically the 1 month that the financial planning team can go on a holiday. And then we take over again in May to finalize the decision on the revision of the financial plan, and the decision on the financial plan and the budget draft we finally hand over to the parliament at the end of August. So now you can see that the figures for the financial plan as planned by the departments, they are the date to June, July. But then we do have the possibility to make an addendum to the budget draft. We hand over to the Parliament in September. So that's what we are currently working on. This decision will follow at the end of September. And then there's the consultation on the budget draft in the Parliament, and the decision on the budget, as you can see by the red color, is following in at the end of December. This slide shows you the single components of the budget. So we, on the one hand, have the budget, the profit and loss statement that contains the net total expenses of expense and income, with some exclusions, as you can see in the middle of the slide. It also contains the budget statements of investments. Here we only refer to the capital expenditures, that the gross value, so not the investment incomes. And then we do have the supplementary credits. That's usually twice a year, and this happens once the budget has already been decided on. So in the following years, if the year is already running and the departments realize they do not have enough budget for the running year, they can apply for a supplementary credit, and so that the budget is sufficient again. You can see all the components that are decided on by the Parliament at the request of the Government Council. But we do also have components of the budget that are decided on by the Government Council. This, on one hand, there's a credit transfer. So if you have unused budget for uncompleted projects, you are able to transfer this to the next year's budget. And on the other hand, there's the credit overrun. That's for urgent projects. If postponements would have an adverse consequence for the canton, or due to federal law, court decision, or transitory contributions. That's also decided on by the Government Council. The goal of those two instruments is, on the one hand, to reduce what we call the December fever, but also the budgeting. And this gives us more precision on the real budget. And since 2 years, we do have to get more transparency on those two instruments that are decided on by the Government Council. We do publish the Budget Plus. This contains the budget as shown on the previous slide, and credit transfers as well as the supplementary credits. Then we do have the medium-term profit and loss equalization. That's basically the law that decides that you have in the midterm, you have to have a balanced profit and loss statement, and the midterm is defined as by 8 years. You can see the current 8 years that are relevant for the profit and loss equalization in the financial plan 2024 to 2027. We do have two special provisions. One is concerning the pension fund that needed to be stabilized in 2011, and the other one is regarding to the cantonal bank. The cantonal bank has a state guarantee, and the compensation for this state guarantee is not included in the midterm equalization. So you can see for the current financial plan, we have more or less equalized midterm equalization. This minus 37 million is like a very small fraction of the 18 billion profit and loss statement we have every year. As you can see, it's only regarding to the profit and loss statement. That means it is not a real debt break as we have, for example, on the state level, but it's the impact is a stabilization of equity in this case. So now we have the budget and the medium-term equalization. In the end, the departments, they want to spend money. And to be able to do so, you have different requirements for expenditures. And one requirement is, as I mentioned before, is the budget. So you need to have an approved budget to be able to make an expenditure. You also need very important the legal basis for it, and you need an expenditure authorization. The expenditure authorization depends on the kind of expenditure is, like say, for example, the responsibility to decide on it. And we do have two main expenditure types. The one is the new expenditure. That's where you have a relatively large freedom of action with regard to the amount or the timing or other essential circumstances. And on the other hand, you have the non-discretionary expenditures. That's the expenditures that are necessary for the fulfillment of the administrative tasks as prescribed by law. And you have some certain state contributions, but also very important at the special cases as they are defined in the law. And one special case are rental contracts, with the exception on financial leasing. So now there we are back again at the entanglement between accounting and financial planning. And on the next slide, you can see the impact that the IPSAS 43 would have on the responsibility for expenditures, because if you have a new expenditures, then you get, as soon as you're over 4 million Swiss francs for one-time expenditure, or 400,000 Swiss francs for recurring expenditures, there's the parliament responsible for the authorization. Whereas for non-discretionary expenditures, the parliament will never decide on the expenditure, but it's always the government council. So this closes the circle from the financial planning to the accounting part, and I would like to hand over to Basilis if there are no further questions.
Thanks, Bettina. Any questions? Yeah, Mike.
So thank you very much for that interesting presentation, even from the German federal perspective. That is like a difference, like day and night. So my question goes into the history, and as I have learned that Switzerland has not just transitioned its accounting to accrual accounting and also its budget, like you presented. So my question is, as lots of jurisdictions, they are doing accrual accounting, but they are doing their budget still cash based. So my question is, what have been, in the case of Switzerland, the main challenges when shifting the budget from cash flow to accrual?
To be honest, I haven't been in the administration yet at this point. I think the basis now is the same. I don't know whether anyone is able to account the challenges, but I think we have enough challenges ahead. So not sure.
Well, I'm sorry, I can't answer the question either. I'm working for 18 years now in public finance, and I have always budgeted in accrual basis.
I mean, I was interested in the point you made, Claudia, in your timeline, that I think there was some sort of shadow accounts, dry run accounts, just before the move into the accrual budget, because I think that is always the issue that you face, that if you're changing the basis, then actually it's quite hard to set a budgetary basis unless you actually understand the numbers. And certainly in the UK, actually, we went to accrual reporting before we went to accrual budgeting for that reason. And even then, actually, we went in 2 stages because there was more uncertainty around the depreciation numbers and the provision numbers, so those were excluded, and you needed that certainty before you could actually get a sort of stable budget. And I think that kind of problems with the transition is, you know, inevitably because it's a different basis and you've got a lot more richer information that you need to understand. I always remember somebody from Australia actually saying to me it was about 4 years in before he was confident that nothing unforeseen was going to come out of the woodwork from that changeover. Lucy, to you next.
Thank you, Chair. Thank you, Bettina, for that very useful presentation. In your budget process, do you consider the budget utilization rate of the entities for their previous year's budget before in determining the amount of the budget that would be approved for the ensuing year, to determine the absorptive capacity of the entities to implement their projects, programs, projects, and activities? Thank you.
So the question was that the previous budget, how it's shown in the next budget.
Yeah, and do you consider the budget utilization rate for the previous
okay,
year
yes.
in determining the budget that would be approved for the ensuing year?
Yes, we usually do this by cutting the next budget for a certain percentage or a fixed amount, like in the referring to the amount that the entities were over budgeting.
Is there a fixed rate that an entity should meet, like for instance 75% should have been of the previous budget should have been utilized before, and that would be the basis for the approval of the next year's budget?
No, we do not have this fixed rate. We decide that basically within the guidelines, looking at what happened in the past year, what has been the deviation between the budget and the final statement. And this year, I think it was average. We took the average of 3 years, like the difference or deviation, and then took at least like 1 million Swiss francs, or I think it was 3% of the budget.
We let at least 1 million Swiss franc in the budgets for not having this December fever. I think Bettina mentioned before. No, so we don't want the administrations to put out all the money in December, just not for having cuts afterwards in the next budgeting process.
Thanks for that. I was interested in that. Liang and then Viandria.
Thanks, Chair. Thanks for the very interesting presentation. Actually, I'm quite interested in the accrual basis budgeting. May I ask whether you will prepare another set of budgeting on cash basis, or will you prepare a reconciliation from the accrual basis budgeting to a cash flow, a cash basis budgeting to see how the cash flow look like? Thank you.
We basically look at the cash flow on the consolidated level in the end for our financial figures, but not on the basis of every department.
But if you have no cash basis budgeting, actually, how can you know what the cash flow for such as an individual department, how much money they can invest in project or etc.?
We don't know, and we don't need to know, because we in the end we have the cash flow on the aggregated level, and that's what's of interest for us for the whole say financial planning, and also for the refunding and so on.
Okay, thank you.
Thanks, Adrian and Scott, and then we'll move on to Basilius.
Well, thank you, Bettina. I was thinking, listening to Ludwig's question, have you or are you considering zero-based budgeting? Because I think zero-based budgeting goes very well with accrual budgeting, instead of setting up ceilings based on past consumption. Zero-based is more demanding as with regards to a budget exercise, but it's quite interesting.
So in the guidelines, we do have one sentence that says it is a zero budgeting process, but in practice, it's not, because you have the financial plan that's basically moving to the next year usually, and we take for example now for the when moving from the plan 23 to 26 to the next one 24 to 27, we take 27 as a copy of 26, and then in the process of the planning they make amendments to this year, but it's not it's in practice not a real zero budgeting process at the moment.
Scott, and then I'd like to move to Basilius.
Thank you for the presentation. Unlike Mike, I don't come from a country that could even fathom this happening. We've gone 27 years without a balanced budget. So anyway, but what I am interested in is how you educate Parliament, because elected officials don't like to be controlled when it comes to spending. So for example, how will you educate Parliament about when you decide what to do with leases? How will you help educate them what the impact that will be on the budget going forward? What type of education process do you have with Parliament members? Because probably most of them are not accountants. That's my assumption.
I think maybe you can elaborate more on that, but I think a very important process is to really start very early and already in the commissions, that you show up the consequences of the change and what it would mean for the financial law also, and like for amendments in the financial law. I think a lot of communication is important. But then in the end, it's the decision of the Parliament. We can show them the consequences and communicate, but we do not have the, final power on their decision.
Probably I can add to this point. My process is always with the financial committee of the Parliament to inform them very early. So afterwards, after much information, they are start to asking the change of me. So I'm invited by them. So it's an ongoing process, and it's learning by doing, especially because these teaching sessions, they don't work now. It's much more in discussion that they learn.
Thanks, Scott. So, Mario, if you're okay, I want to hold your question and let Basilius do his presentation, and then if need be, come back in at that stage. So, Basilius, to you.
Thank you, dear Chair, dear honored board members, board staff, technical advisors, and ladies and gentlemen. IPSAS, an enabler for a conclusive public finance management. I choose this title wisely, and dear Chair, I kindly thank you for the opportunity to outline some of the main benefits of the use of IPSAS in the canton of Zurich, and to strengthen some points which the finance minister, Claudia, Corinne and Bettina already mentioned before. As the head of the finance administration, the core of my duties is to link the world of administration with the world of politics. In the sphere of administration, our main focus is the correct management and the neutral and complete reporting of the finances in its different aspects. It is a view on the present and mostly on the past. In the sphere of politics, the main focus is on the different interpretation on this information and the conclusions for the future. That means the measures the politicians want to implement according to their interpretations. This is more a view into the future. I'm coming back to this point. If politicians don't like the information or their logical interpretations, they often challenge or dispute the underlying rules. Quite some IPSAS rules have been questioned within the last 15 years, but in the end, no one has been changed. This is due to the precise and neutral rules. It is a direct benefit of your extensive work as a board member, board staff, and technical advisors. Even if your work takes sometimes a long time until a standard is completed, the sound and wise wording of the standard proves to be irrevocable. In this way, IPSAS provides a great acceptance, and not only in the administration, but also in politics. Surely, the acceptance also arises out of the international application of the standard. As an effect, IPSAS serves as a main link between the two spheres of administration and politics. Both spheres rely on the same rules. As both spheres rely on the same principles, we prepare the budget, as you heard already, according to the accounting rules for the correspondent year. This is the reason why Claudia, she mentioned it already before, and her team is already now preparing the accounting manuals for the year 2025. It will become valid in January 2024, right when we start the budgeting of 2025. It also applies to the approval of projects Bettina mentioned before. That means the authorization to sign binding arrangements beyond the legal year. It finally applies to the closing of the annual accounts. As we apply the same principles in the budgeting and the accounting of a legal year, we can produce a quite precise prevision of the future, and the principle of faithful presentation is applicable also for the budget. The deviations are therefore very predictable also. In the last years, there was a higher payout of the Swiss National Bank, for example, the quite constant budget residual, and a deviation of the tax revenues due to the crisis. The precision is going quite far, such as for the first time in 2024, the government is planning also the budget residual as a minus position, as well as the recording of a provision. Until now, we understood both as year-end results or transactions in the annual statement. Let me emphasize now two specialities of our accounting in the Canton of Zurich. On this first slide, I would like to point out our broad consolidated scope. Compared to other cantons and entities, it is very comprehensive. It includes a university and 3 universities of applied sciences, 4 hospitals, as well as our public transport system. All of these entities are dependent on the canton in terms of their budget. That means their funding, as Claudia mentioned before. The consolidation does not include the cantonal financial institution. That means our cantonal bank, the state-owned electric power company, as well as the buildings insurance company. These 3 entities are not dependent on the state, which was the main reason for not including them into the consolidation. Furthermore, in the case of the cantonal bank, a consolidation would not deliver more transparency, as the state itself would largely disappear in a consolidated balance sheet. As I mentioned before, we apply the same rules for budgeting as for accounting. That means that we are in compliance with our constitutional budget rule, Bettina explained before, including all consolidated entities. This is a huge advantage in case of deteriorating finances within controlled entities. Under the common budget rule, the financial problems of one entity become a problem of all entities, because the household has to comply with the budget rule as a whole, consolidated. Therefore, financial problems in a consolidated entity are not neglected, and they cause an immediate attention of all others and a pressure for improvement by all others. The other entities obviously don't want to solve the financial problems, and that means they don't want to economize for others. These dynamics are the reason why our comprehensive consolidation sometimes is contested. There is probably the hope to solve problems by moving out or letting disappear out of our budget rule. Obviously, this won't be the case, which is also the reason why finally our comprehensive consolidation has not been changed until now, and as I predict, won't neither be changed in the future. The other specialty I would like to emphasize is the separation of our assets into general asset classes, Finanzvermögen and Verwaltungsvermögen, which I will explain to you. It is a long and traditional system we use commonly in Switzerland. It is an outflow of the financial referendum, the citizens' right to decide about large projects they have to finance by taxes. As in the Swiss Confederation on federal level, this citizens' right still doesn't exist. This separation there is not used. We separate our assets into classes to support our decision-making. Both of them can afterwards contain all the asset categories we commonly know. In the Finanzvermögen, the first, we group the assets which are not bound for the use of public services. They don't have yet an attributed purpose and can be sold without any impact for public services. Therefore, we evaluate them at fair value. They typically include the money on bank accounts, but also buildings and land which are not in use for public services. They are in the competence of the government, that means the executive. In the Verwaltungsvermögen, we group the majority of our assets. It's a similar idea to the IPSAS concept of assets primarily held for their operational capacity. These assets are attributed to a specific public service. Typically, they are built up for long-term use and often are quite expensive, such as schools, streets, or buildings for administrational use. They cannot be sold without a direct impact on public tasks. The competence to build up of these assets is assigned to an institution according to their value. As Bettina mentioned before, above 4 million Swiss francs, the competence is at the legislative, that means the parliament. That is the best representative of the citizens who have to pay these assets with their tax cheques. They can collect signatures, as I mentioned before, and vote about such projects in a referendum. Traditionally, we call the build-up of Verwaltungsvermögen investment expenditures or CapEx. Here you can see a figure outlining our balance sheet structure, or with the new term, the statement of financial positions. You can see the separation of the two assets into two asset classes, Finanzvermögen in light blue and Verwaltungsvermögen in dark blue. On the side of the liabilities, there is no specialty. And as I mentioned, the build-up of Verwaltungsvermögen is called investment expenditures or CapEx. Additionally, you can see our main balance sheet figure, net debt 1, on the right-hand side. It shows either how much of our debt is not covered by immediately disposable assets, or in the inverse sense, it shows how much of our assets in use for public services are not covered by equity. The interpretation of this figure is that it shows how dependent we are on third parties for funding our assets in use for public services. It gives a clear sign to rating institutions and to the capital market on how valuable our assets are in their eyes. Obviously, in a case of a financial emergency, we could not sell streets and would also have enormous difficulties selling schools, either because we don't want to sell these assets or we don't find a buyer. I would kindly like to encourage you to study this system, including our asset classification, traditional classification in Switzerland, also within IPSAS, as it has proven to be very useful in Switzerland for the interpretation and steering of the public households, and I think it won't be changed in the future. Let me point out at last a little bit sad topic, but which is near to my heart. As you might know, within Switzerland, only the Confederation and a few cantons, I think 5, Claudia, no, are applying IPSAS. The vast majority of the municipalities, around 2,400, and the 26 cantons have still not moved forward to IPSAS. The argument is that IPSAS is considered as too complex or too expensive for the small entities. I personally don't understand this argument, and it could be a misunderstanding also. In my eyes, the IPSAS standards provide solutions for every kind of question. But after all, the IPSAS book is thick and it is in English and not in German or French. Maybe it is that simple. Anyway, I would like to ask you for a self-check, if there could be also a little bit of truth in these arguments, or if any other countries report comparable obstacles. On the one hand, the IPSAS board probably could support a broader movement with providing helpful guidelines or examples for an easier application as a kind of marketing also probably. On the other hand, it is surely also a task within our country that we would have to set up better structures for supporting the public entities in their transition. I promise to you that I will focus on that point and strengthen the talks with my colleagues about this topic. Let me conclude the few slides with a warm thank you for your extensive work again in the benefit of the international accounting standards within the board, the staff, or the technical advisors. I really appreciate your work on a constant basis, and I am fascinated by the high quality. It is an honor to have you here in Zurich, and I hope you can enjoy these days also with a visit to the old town, to the lake, or to our exciting gastronomy, or even to our tremendous cultural institutions. And I am sure we can discuss one or another topic also during our social dinner tomorrow night at the amazing restaurant Bebek. And now I'm here for any question if you have some.
Thank you, Basilius. And I think that balance sheet analysis is very interesting, actually. We'll definitely think about it. Adrien, to you first and then to Mike.
Oh, thank you, Basilius. Very interesting presentation. I must say that I was quite interested in the last slide you displayed. When you say there's an issue with the municipalities and well, smaller entities, we struggle currently with what is small, but I would say smaller entity, okay. But what I don't understand is, if I listen well to Corinna's presentation, you talked about that sort of harmonized framework, which sort of replaces the IPSAS framework, but is also an accrual accounting framework. So these smaller entities, at least they have to apply that sort of accrual-based framework. So how come they believe it's less complex than IPSAS, which I do believe is not as complex as people think, because it's very strongly founded on this set of principles that are explained in the conceptual framework, which helps people better understand what IPSAS is about. So what is exactly the issue they have with the IPSAS framework when they say it's too complex or too expensive? We heard of, I mean, I had some returns from smaller entities saying, well, when we have to have so many disclosures or making so many complex judgments, it's very complicated for us. But I don't believe it is, as you said. So I'm really interested in understanding the comparison between this harmonized framework, sorry if I don't recall exactly the name, and the IPSAS and the differences between the two, which I don't see much, in fact.
Well, the harmonized framework is compliant with IPSAS, but it's easier and it looks easier and it's something of us, made by us. Meanwhile, the IPSAS sounds a little bit frightening to the people. And I think what I mentioned. No, probably there must be just a little bit of marketing action or an emphasis on the true points which really matter for small entities, and to show with easy examples how they would be implemented. Probably it's much more that now that these 5 letters sound a little bit frightening, and it's something from above and far away. But probably Claudia, you can complete the answer.
I would just add, there is 1 or 2 exceptions in our harmonized accounting standards, which have nothing to do with a fair presentation. It's just this compromise to get them on the one hat, I would say. It allows, for example, depreciation of fixed assets for no reasons, not as an impairment, just for budget reasons. So that's, I think that's the major exception. So, and because we have still a rule or principle in these harmonized standards, which allow to influence my financial statement or budget, that's why they want to keep properly with an own design standard.
Thanks. So if Mike and Mary can ask their questions, and then just give Basilius the opportunity just to wrap up the session. So Mike and then Mary.
So thank you very much for that nice words also to the IPSAS board. Just a short question on that self-sustaining entities, because what you picked up here, it was financial institutions, electric power companies. To my mind, these are exactly the ones that caused us really in the last year's trouble during financial crisis and energy crisis. And so I think they're often subject to guarantees granted by the state or the coverage of losses. So I would like to better understand why do you exclude them from the consolidated from the consolidation, because I think they are really bear certain risk to government.
Yes, that's true, but the risks are managed on federal level and not on cantonal level. We are not funding them for their existing, so they have income. They have yes, all this their proper income, and after all, they're self-sustaining. It is like this. No, we have a bank control on federal level. We have insurance regulation on federal level. They have assessments through the federal instances. And if they would not comply, so they would have to build up more equity or something like that. They would have to do it, and they are doing it actually. So they are complying with the federal rules. But on our level, they are self-sustaining. They're not depending on our funding.
Thanks, Mary.
Thank you for your presentation. And it is so interesting to the distinction between the Finanzvermögen and Verwaltungsvermögen. And so it is so easy to classify these 2 types of assets. It is one question. And so related to the accrual-based budgeting, and maybe the investment planning is so important for the whole of the government, and also the individual department. It is so important. So how to relate the whole of government investment plan with the individual department plan. Thank you.
Well, to your second question, we make individual investment plans for every entity. And then we consolidate them into one investment plan for the government. And we now face the challenge that there are too many investments. So that would cause a build-up of our debt, which the politicians don't want as a goal. No, they want a steady debt. So we will have to break down again some investment planning from the top level to the bottom level by giving guidelines to the departments on how much they can put into their planning for investing. And the first question, how to separate the assets between the two classes, is just by a legal basis. If there is a legal base for such an asset, then it will be included into the Verwaltungsvermögen. And if there is not a legal basis, you can dispose at any time of this asset. So it's on Finanzvermögen.
So I think it just remains for me to thank you, Basilius, Bettina, Corinne, and Claudia, for a series of fascinating presentations. I think each of them was very relevant in terms of the discussions that we're going to have this week. And I think it's very inspirational, actually, to hear how you're really using this accrual information in practice to control the public finances so successfully in the dialogues that you're having with the politicians. So thank you very much for sharing that experience with us. And thank you as well, again, for, for hosting us this week. And yes, as you say, Basilius, we look forward to further discussions over the meal tomorrow night. But please feel free to remain with us during the week for as much time as you have. So thank you very much. And if we can just show our appreciation. Okay, so with that, we come to the coffee break, and we break until 15:15. So back here at 15:15, please. Okay, so if we can come back to the table to start again. And before we head into the next item, I realised there was one welcome, which I was very remiss not to do right up front this morning, which was actually to welcome Fabienne to the table formally for the first time in her new role as CAG chair. So Fabienne, you're very welcome. I know there'll be a number of items that you'll want to input on, but congratulations on your election as CAG chair.
Thank you, Chair. Thank you all. To say some words, or I'm happy to be here. And I'll try and report back as much as I can on the CAG comments to you. Thank you.
Thanks, Fabienne. So Ross, to you in terms of Programme and Technical Director's report.
Thanks, Ian. And I can say that we've already, on the staff side, been having lots of discussions with Fabienne over the summer, and thank Fabienne for picking up the CAG chair role from Thomas and kind of seamlessly working with staff as we work through the various projects and feedback we've had from the CAG in June. So there's three main items I wanted to quickly speak about from the Program and Technical Director's report. The first is an ask where I'm looking for the board to approve a narrow scope project to look at the outstanding IFRIC 6 that have been on our table 3 of our IPSAS IFRS dashboard for a number of years. This is stemming from a discussion in June where members indicated a desire to have staff more closely follow the IFRIC process going forward in the next strategy and work program. And as part of that, as we start to look at how we might do that, we realized we had these hanging IFRIC 6 that had been sitting there for many years waiting for a project or a time to consider. They relate, the ones that we'll look at relate to standards, guidance we've already brought in from IFRS. We just have never taken the time and haven't had the resources to stand back and consider whether we should bring those into the IPSAS or not. So all I'm asking for the board to agree here is to agree that we do this minor piece of work. Starting in December, we'll bring an initial analysis of each of the IFRICs and the 6, what they relate to, and whether or not staff believes we should integrate them into an exposure draft and expose them to be brought into the IPSAS literature. We've had an initial high-level review of them. We think they are narrow scope in nature, but we need a little more time to look at them. And our plan is to bring them back with draft guidance that could go in ED for December, but not pushing for the ED to be approved then. If the board's not comfortable, they want more work, we could bring it back in March. If it's okay and they're relatively simple, we'd take them forward. So it is, from our initial assessment, a fairly minor piece of work, but we do think it sits under current theme B, IFRS alignment, and those narrow scope projects we agreed in the strategy we would pick up. And this is a piece of work we think we could clear out relatively easy and again, further catch up with where the IFRS is and position us better for the next work that we'll try and do, the next strategy related to keeping up more in real time with the IFRIC discussions, both any of their outputs or their actual agenda decisions where they say they're not going to do anything. So with that, I'll pause for comments.
Okay, members okay with that? Claudia.
I'm sorry, I didn't really understood how is the process. IFRICs are outside of the IFRS standards. So when we analyze them, do we plan then to add our IPSAS standards? If there are improvements to our IPSAS standards, is there something additionally? It's not really clear what is the aim or how we can manage in, because in the IFRS world, they are outside of their standards. So it's difficult probably to get them into our standards.
Thanks, Claudia. It's a good question. So traditionally, what we've done with IFRICs is we've brought them in as appendices to the related standards. So they are in the literature in the past, the ones we've brought forward. The best place to look if you want an example of what that looks like is the financial instrument standards, where we've brought in 2 or 3 IFRICs as appendices to IPSAS 41, because they provide further thinking on how to apply the principles in IPSAS 41. So that's how we've dealt with them traditionally, and that's how we would propose we would deal with them here. But we'll bring an analysis with the specific proposals in December. The only thing I'm asking for now is just the space for us to spend time on that and think about it and bring back proposals. We haven't decided yet what we would do, if anything. It's just we need the time to analyze them, do the research, and bring it back to the board.
And if you look at the dashboard, you'll see that actually on the standard by standard analysis, it gives you the mapping to the underlying IFRS where that's relevant, but also where we brought in an IFRIC or a SIC into the IPSAS. Okay, so I think with that we're content.
Thank you. So the other item I wanted to just remind members on is, staff have been working behind the scenes, arranging a number of regional roundtables with the anticipation that we'll be approving strategy work program later today. And, this is a process we operated last time we did the strategy and work program that really helped in two ways. It helped us in areas where IPSAS adoption implementation is increasing, engage directly with stakeholders that we don't traditionally get formal comment letters from, or a large volume of formal comment letters. And that direct feedback we take from these roundtables we'll use as inputs along with the formal comment letters when we finalize the strategy and work program in 2024. They also helped us actually build our contact bases and understanding of what's happening in the various regions with stakeholders. So as we've been talking about the last few meetings, we are well advanced on the planning of these events. They will be staff organized and led from the perspective of that makes sense, that we're doing the heavy lifting on providing the slides, the agenda, doing the organization. But like last time, we also want to let the regional members know about the events in their various regions. And if they have time and interest and can attend, we'd be more than welcome to work with the regional members on the actual day to deliver the roundtables and to get the feedback. Amongst the staff team, it's a diverse group of the staff team that's going to the various events. We're trying to split the responsibilities so that everybody is participating in some way, but not overburdening any one person. And I realize it is an additional ask on member technical advisor time to make time available for these events, but I did want to make it clear that we're more than welcome to attend. If you are interested in attending, let me know. If you even want to participate and help lead a session, again, let me know and we'll work with you to run you through the slides and help develop that, but there's no expectation on that. On the slide and in the report, you'll see the various dates. There are other events at some of the events around the roundtable, like normally a capacity building event that a local institution's holding. So the Manila event will be at the Asian Development Bank headquarters. They're doing a regional capacity building event for 25 countries the day following our event in Manila. And they'll be using that event to get people to come to our roundtable. So again, just want to put the dates on if you're interested. And you want to talk more, find me on one of the breaks or let me know and we'll find some time this week to chat while we're all here. And then I'll start to include the various members who are interested, technical advisors interested in their event in the invites and the administration, so you're aware and we work together on it. So with that, I'll stop for now and see if there are any questions.
Thanks, Ross. And the other thing just to note is that we're taking the opportunity of the fact that we will be getting countries or representatives from different jurisdictions together to try and update some of the information that we have on what's going on in terms of implementation, with a view to updating the International Public Sector Financial Accountability Index information. So if you see that, that's what's going on. That we're using that as an opportunity to get more information on that. Any points anybody wants to make? That's all. Okay.
Another key item outlined in the report, something that staff's been working on for a while at the request of board members on the difference between task forces, editorial groups, drafting groups, as we start to use different words for slightly different activities. In the appendix, you'll see this visual diagram with kind of explanation of each of the groups and when we traditionally would use them throughout the project, or when we have been using them throughout the project, as well as their different specific roles. You'll see there is some overlap between the different groups, and I've explained in the report where we currently have active task forces and where we're planning to use a drafting group for natural resources. And again, showing where we use the editorial groups to work on finalizing drafting for various pronouncements, whether that's consultation, paper, exposure draft, or the final pronouncement itself in the finalization process. So interested if anybody has any comments on this or any of the groups, happy to have a quick discussion.
Not seeing any flags raised.
So that's
okay.
The main things for the technical director's update today. Obviously on Friday, we'll revisit the work program overall based on progress at the meeting, but we'll have to see how the various approvals over the next few days go. Thank you.
Okay, thank you, Ross. And so with that, on the topic of approvals, we move into the session on retirement benefit plans. Dave, are you leading for us here? Obviously, Christoph's available virtually. David, unfortunately, his flight was cancelled yesterday, so he's hoping to be here late this afternoon. Dave, if you can help us through this.
Thank you, Chair. So I will be leading this session today. Christoph is online to support me, but we thought that because it's an approval, it'd be easier for someone in the room to lead the session. It's a little easier to answer questions. But like I said, if I get in trouble, Christoph is up here and he's hopefully here to answer any questions if I get stuck. Just to set the scene and to remind members, the exposure draft for IPSAS 49 was released last year, and the board was able to see the initial review of comments in March. And the key takeaway for me from that meeting was the proposals were strongly supported. A few items came up, and on reflection, the real theme that came through that the board really talked through and really addressed at its June meeting was a clarification of how IPSAS 49 works in relation to the rest of the IPSAS suite of standards. And the way I think of it, and I think the board kind of hit the nail on the head in June, was the other IPSAS really deals with, for the most part, captions on the financial statements. So inventories, financial instruments, PP&E, whereas IPSAS 49 tells retirement benefit plans how to develop a specific set of financial statements. So they don't really work necessarily together. And that was really what constituents wanted explained. So with that being said, even though there was that clarification to make and there weren't a significant number of issues to clarify, what we really wanted to communicate was board members did take the time in March and June, and in between June and now reviewed the document again. We worked with board members, and really a thank you to all board members that took the time to review the document again. Thank you to our task force and drafting group that really led us through a pretty technical project that we didn't necessarily have the full expertise, or it's a very unique topic. So thank you to all our task force members that shared their expertise in leading us through this. So thank you from staff for all your help in leading us through this project and leading us to this moment. Before we dive into approval, there were two items that came up after the posting of the papers that we put on slides that we wanted to share with you. Both actually relate to June discussions and the clarifications the board was trying to make in June. The first one was, and maybe a little background, when we were talking about these two slides that I'll go through in a second, they're on the verge of editorial, but I thought they were a little more than editorial. So I wanted to make sure they were shared with the board before we put them through. The first one is to paragraph 5, and you'll see what staff is recommending is to delete the in bracket section at the very end, see IPSAS 42. The reason why staff is proposing to amend this is based on a board comment. Coming out of the June meeting, IPSASB staff rewrote or amended BC 11, and BC 11 really clarified the interrelationship between IPSAS 49 and other IPSAS. And upon considering the board comment and rereading paragraph 5 and BC 11, we thought that paragraph 5 was a little too rigid, and BC 11 really explains the complexity in deciding which standard to apply. So as a result, we thought this was an easy fix to just remove the actual reference to IPSAS 42 in paragraph 5 and leave the better explanation of which standard to apply in BC 11.
Everyone okay with that change? Okay, thanks for that, Dave.
So the second change that staff is proposing is to add AG6. So this is a brand new paragraph. And what this paragraph does is, again, going back to the board's June discussion, it clarifies how IPSAS 49 works with the other IPSAS that currently exist. And it basically says that you apply IPSAS 49 and it supersedes other IPSAS in certain cases. The reason this came up is a member highlighted, I think it was paragraph AG 25, and AG 25 talks about how IPSAS 49 supersedes IPSAS 1. And they were expecting to see amendments to IPSAS 1 in the consequential amendments. And even though we were able to resolve that specific issue, it gave staff pause and allowed us to go back and realize that maybe we didn't clarify the board's June discussions very well. And by adding AG6, this is what we're trying to do, is better clarify the June discussions and how IPSAS 49 works with the other IPSAS in the suite of IPSAS. The actual wording from AG6 comes from IAS 26, the retirement benefits plan standard from the private sector that we converged with. So not really unique wording, but we thought it was good to pick up and better clarified the interrelationship between IPSAS 49 and the other IPSAS.
Thank you, Dave. Any concerns on that? Okay, so I think we're fine with that.
So that brings us to approval. So I will go through each of the steps and bring Ian, Ross, and the board in as we go through. So the first step of due process is staff present the final revised version of the standard. You saw that in agenda item 4.3.1. The second step is the program technical director advises whether due process has been followed effectively.
I assert the due process has been followed fully and effectively.
The next step is the IPSASB confirms whether it's satisfied due process has been followed effectively.
Any comments from the board on due process application? Okay.
Next, the IPSASB votes.
So just a reminder on the voting process, it's a little easier this time as we don't have anyone online. So we'll do 4 first. Raise your hand. I'll count the numbers. We'll do against for anyone who wants to vote against, and then any abstentions if we don't have the numbers yet. So first, those who vote to approve IPSAS 49, please raise your flags or hands, whichever is easier. So I have 17 for. So if I could ask everyone who's for to put down, I'll ask for those who are voting against to please raise their flag. One against.
I just want to explain because last June they said about the we are using the different rates between employer and the fund. We talk about the fund actually, but I think under the this BCs seems that in terms of consolidation, it is unlikely to be consolidated, but unlikely there is a possibility, but in rare circumstances. But under this standard, where how to be consolidated, how we can console these two things, even though it is under rare circumstances. So maybe if the explanation is somewhere there, I will, thank you.
Thanks, Noriati, for explaining your dissenting view in the vote. We'll document the summary in the minutes and we'll work with you to make sure we've clarified your point clearly. Thank you. So with that, we have 18 votes, 17 for, 1 against, no abstentions.
Next, the IPSASB considers whether re-exposure is necessary. I'll speak to this. There's been no significant changes to the document and staff don't believe that consideration on re-exposure is necessary.
Does anybody disagree with that? Okay.
Next, the IPSASB sets an effective date. Staff proposed an effective date of January 1st, 2026. That's within the nearest window after 18 months, which is standard practice. And we thought that was appropriate because a number of our constituents indicated they wanted this guidance, and those that need it as soon as possible. So staff thought it was important to get it out as soon as possible.
Any comments on that proposal from staff? Okay, so I think we support the staff proposal on effective date.
And then the basis for conclusion are also included in agenda item 4.3.1.
Okay. So thank you very much for that. So with that, we have approved IPSAS 49 retirement benefit plans. So just to reiterate again, the thanks to all the board members and technical advisors who provided comments over the summer. Thanks to the task force and staff for getting us here. I think it is an important addition to the IPSASB's literature. I think there is a remaining issue, as Noriati highlighted, and I think that's something that we may want to actually look at some stage as to whether there's some additional guidance, perhaps in IPSAS 35, that we need to think about. So I think we'll log that because I know from experience that this is an issue. So thank you, everyone, for that. And I think with that, we completed on retirement benefit plans and we move into item 5 in terms of the next strategy and work programme. So Dave, to you again, and welcome to the table, Agostina.
So I'll kick us off again, just to walk through the process that the IPSASB has followed, really highlighting what the IPSASB has done between, I guess, June, July, and today, and then provide an update on the due process steps that were followed in developing this document. So I don't want to go into a lot of detail on what the IPSASB did in developing this document up until July. You were all here for that development. The only point that I really want to highlight, and this will come back in my points in a minute, is in March, Ian provided the pick and update on where the IPSASB was leaning on the strategy and work program, and gave a slide presentation, talked about the evolution and what needed to change in the strategy. So the pick's always been in the loop. I'll update you on what the pick said, but just wanted to highlight that that's not on this table here, and they have been in the loop for several months on what we're doing on the strategy and work program consultation. So what staff have done since the IPSASB's discussion in July, and again, just a reminder, in June, the IPSASB saw its first draft of the strategy. We broke into roundtables to talk about specific aspects of the document. And then we brought the document back in July, reflecting all the June comments and really allowing this IPSASB to deep dive into the document, and did a page flip and tried to take as many comments as possible. We even set a pretty hard deadline of a week or a week and a half after, because after that, as you'll see, hopefully you like it, it went to a designer. And it's becomes more and more challenging to make those changes. We don't control the changes anymore. We have to go through the designer. So we wanted to make sure we had captured as many of those changes as possible coming out of the July meeting. We also heard from the CAG just before the July meeting, or the July check-in. We've incorporated their comments, and you'll see as an appendix to the document that we've reported back every single CAG comment and how it's been addressed. And we've addressed all of IPSASB comments coming out of July meeting as well. And then Augustine has worked with a number of you in addressing the broader or more specific comments to make sure that those have been reflected appropriately in the document. I guess to highlight again that we worked with the designer, and then after the document, the first version of the design document that was sent to the PIC so that we could receive PIC comments, and I'll share those with you shortly. Just to wrap things up, and this ties in really well to Ross's presentation, we're expecting to approve the strategy consultation at this meeting, and hopefully get it out before the end of September so that we'll have an actual document to discuss, or an exposed document to discuss at all the roundtables that will begin in October.
Thanks, Dave. And as you say, there is a summary of CAG feedback, but Fabienne, do you want to make any additional comments?
Thanks, Chair. Real quick comment. Yes, since our meeting in June, we had a meeting on the 18th of July, the CAG members exclusively on the strategy and work program. And as Dave said, and reported back on your 27th of July checking meeting, the CAG comments were that the document was going in the right direction. So in a nutshell, that's about it. And I wanted to take this opportunity to thank staff for providing a full report back on the comments from the CAG. And I've seen that those comments were addressed in the current document. So thank you for that. And the other thing I wanted to mention is that the CAG will go on supporting the board both on financial reporting and sustainability reporting. So you'll hear from us on all counts as you see fit. And that's it from the CAG for now. Thank you.
Thanks, Fabienne.
So next, I'll go through the comments received from the PIC. So I have 2 slides on this. I won't spend a lot of time on the first one, but I think it's really important to highlight this first slide because these were the positive comments. And I know it's very easy to get lost in not the negative comments, but the specific points they raised, but they were very supportive of the direction the IPSASB was going. And the reason why I made the point that Ian gave a presentation to them in March is the first line in their email was, this is almost exactly what you proposed in March, and they were happy that there weren't significant changes. And what was interesting to me and how I reflected on that was the board's put a lot of work into tightening it up and making it more concise, but the decisions made in March are still consistent with where the document was today. And that gave me comfort, and it's just something I hadn't really realized until we received that comment from the PIC in the email. I'll go through the positive comments really quickly. Again, I just wanted to highlight them. Similar to the CAG, the PIC welcomed the format of the strategy. They thought it was concise and to the point. They really liked that we were still going in the sustainability direction, but it was not detrimental to the financial reporting standard setting process. We even had one PIC member say that their organization stood ready to support the IPSASB in however they could with regards to sustainability as we move forward there. And they also really supported and felt it was appropriate that the IPSASB was changing its focus from standard development to standards maintenance, and felt that was appropriate given the environment we're in today. On the point, maybe I can pause for a second. On their comments on the documents on areas that the IPSASB could consider, the first one was the SMCs were duplicated. So we have them within the text, embedded in the text, and then we have them at the very end, all 4 together. My response to that is that that's the format that is consistent with all our exposures. The board can discuss that if they want to take that up further, but staff thinks that's consistent and thinks it's important to have all the comments together, or all the SMCs together. Another comment they had was consider clarifying how the IPSASB is going to consult with its stakeholders during the next strategy period on determining what should be added to the work program. Staff's response to that is in the previous strategy, we indicated very clearly that midway through the consultation period, we would consult. Staff think that in this document, we should clarify that and continue to give the board flexibility on when it will consult. And we've indicated that that's when resources will become available, but I think it's important to make sure that's clear. So staff, assuming the board is okay, is happy to take that away and clarify that in the financial reporting section of the document and the section that relates to the next consultation or mid-period consultation. Next, PIC members noted that the focus area, I think we call it, the promoting and adoption implementation focus area, was dependent on future funding and make sure that, or consider making that point in the document. Personally, when I read that point, I didn't have any immediate reactions, or I shouldn't say immediate reactions. I didn't have an immediate way to address that point. Right now, my recommendation, Ross and Augustine recommend that we take that away and think about how to incorporate that into the document. I'm not against that anyway. I just didn't have an immediate fix. Next, I thought this is an interesting recommendation that the IPSASB should consider developing some kind of guidance to help jurisdictions help them consider how to amend their structures to better adopt and implement IPSAS going forward. Well, I thought that was really interesting. It's not really in the IPSASB's remit. It's really a jurisdictional decision on how they're going to set up their processes. But thought it was interesting. Just didn't think it was necessarily something that we can include in the document or was in our remit. And then the last point was to incorporate in the document that different jurisdictions have different challenges in front of them. So those that are on cash basis have a challenge on moving to accrual and then adoption of IPSAS. Those that are currently applying IPSAS have implementation challenges on understanding how to apply IPSAS in practice related to specific issues. And the PIC thought it was important to reflect that in the document. This one I did have a better sense on how to address. We thought we should update the document, and we thought that just adding a sentence or two indicating that we do acknowledge this is important and not very difficult to do. So, sorry, not very difficult to add into the document. So staff believe that we should add that into the document.
Just pause to collect any comments from members on the point, just before picking up any comments on the point about developing national structures and bodies. I think it's probably worth having a look at pathways to accrual and seeing whether there's anything that needs to be amended or added to clarify that, because I think there is probably some material in there on that. So I think it's worth having a look at that. But as you say, that's not for the IPSASB's work program per se. And so I think in terms of the document, that's not an amendment we need to make. So clearly you propose that there should be some slight drafting amendments just to reflect some of those points. Are there any points members want to raise on that? Yeah, over here, Adrian.
I didn't quite understand the position of the PIC with regards to sustainability, our sustainability work. As far as we're concerned, I mean, we tend to develop a standard on sustainability reporting. So how could it be detrimental to standard development? I mean, what was the point of the PIC with that?
So I can clarify that. So they really supported us, or supported the board moving into sustainability reporting and developing sustainability reporting guidance. What they were happy to see is that we're looking for additional funding, and we're not entering into sustainability reporting at the detriment of financial reporting development. So we're not losing our work program on financial reporting.
Any other comments? Okay, so there will be an editorial process on the strategy, as with all the finalization of all of our public documents. Staff will add some limited drafting to address the points that the PIC has made, or to emphasize the points that PIC has made where relevant. And I think on that fourth point, though, we need to have a look at the pathways to accrual. Okay, so move us on then.
Hi, everyone. It's a pleasure to be here today with you. And the agenda paper that I would like to discuss is the specific matters for comments. On the last meeting, we hadn't discussed them in July, but we were taking your comments and instructions from the June meeting to streamline the specific matters for comments and to focus specifically on what is being proposed in this next strategy for 2024 and 2028. And then also one of the comments that we received from the board was to ensure that the SMCs were aligned with the questions that we're expecting to ask at the regional roundtables. So that's the instructions that staff took away. And with that, the recommendation from staff is to have 4 SMCs. One is specifically on the revised strategic objective that looks to reflect the focus on maintenance of IPSAS and the decision of the IPSASB to develop sustainability reporting guidance standards. Then we have a second SMC to discuss the addition of maintenance activities, such as the post-implementation reviews and the application panel. Then there's 2 additional SMCs that were added to seek input. One of the instructions and comments that we received was that this was a great opportunity to obtain input from our constituents to see what additional financial reporting, additionally to the ones that we are referring in Appendix B, the IPSASB should consider to develop, as well as the discussion on what additional IPSAS, beside the ones highlighted at this point that could be undertaken for a post-implementation review, we should look at. And the last one is the IPSASB decided the additional 3 projects for a sustainability perspective, but this was a good opportunity as well to see what are the next topics the IPSASB should consider when those 3 projects are completed. Thank you.
Thanks, Agustina. Any comments from board members? Obviously, if there are any minor drafting points on those can be pulled into the editorial process. Yeah, Mike.
So thank you very much. I have a comment on SMC number 3. I might provide you something in the editorial process, but I think we should be in that round of the work very precise on the differentiation between development of new standards and on maintenance. So I had to read the first sentences of SMC 3 several times, and I was not sure what we are saying. Are we saying that the standard setting projects, they are part of the work program, or are we saying that the work program differentiates between development and maintenance? So I would make a proposal to make it easier, saying, okay, we have the development of new standards and pronouncement as well as the maintenance of the existing standards. That's the first thing. And the second thing is number 2 on the SMC, where we have that mentioned that potential activities, but I think we are meaning projects, because within our paper, we are also differentiating between maintenance activities and maintaining projects. So we should align that as well, if you agree.
Okay, thanks, Mike. Todd, and then Lynn.
Thanks, Ian. And I'm on SMC3 as well. When I read SMC3, it's seeking other potential projects that we could do from a financial reporting perspective. But what I wondered whether it could also do was actually get an indication from our constituents now about what the key sort of financial reporting type issues they have, so that we get a bit of a sense now while we're out consulting as to what are likely to be the potential financial reporting projects that are top of mind for people. So it gives us a bit of a chance to get that view and do a little bit of pre-planning even before we go out for the consultation that we want to do as resources become available. We've got some information which might actually help us if we take this opportunity to seek some views about what is top of mind from our constituents in the financial reporting space.
Okay.
Conceptually, I don't have a problem with that, Todd, so maybe let staff take that away. I like the suggestion, Todd, of we only go out and consult with our constituents so often, so why not take the opportunity to, I don't want to say prioritize, but understand where their concerns are, and that might help us when we do a work program consultation. What we did in 2021 is we proposed 4 projects, I think, and if we can get a steer on what we might want to propose in our next work program consultation, I think this is a good opportunity. I'll just add another point, and this kind of goes to what you're saying. When we were developing these SMCs, we really thought about how we would discuss them at the round table, so in person as well. And that was a comment we received at the June meeting. And I just think your comment there might feed in really well to discussions that we'll have at round tables. So let staff take that away. And I personally don't have a problem with it.
Okay, thanks, Dave. Lynn, to you.
So I'm on SMC3 as well. And when I look at SMC3, I got a bit confused about, was it just asking me about the major financial reporting standard projects, which in figure 4 isn't all of the activities, but then it goes on and talks about all of the activities in standard setting projects, which sort of also led me to think about just how that exhibit is sort of portrayed at the moment, because tucked under maintenance activities and other projects, you've got, you know, what I would call project work. So I just wondered about how we're displaying that versus what we're asking for in the SMC, and it felt a bit confused about whether or not I was being asked about the ones in dark blue in figure 4 or all of figure 4. And maybe you just need to look at that word. I just felt that wording needed to be looked at again. And within that, you know, figure 4 is our financial reporting standard program. And I'm not sure it absolutely comes across like that in the way that you are portraying it currently. Because there's sort of an implication is that you could read that and say, we're stopping doing major standard setting projects, but on the other hand, we are still doing standard setting projects. And that doesn't quite come over very clearly, because some of the lighter blue, you could end up having standards or standards amendments from. So I just think there's a bit of work that needs to be done, probably in the SMC, but it wasn't really linking very clearly to the figure, and I got confused on it.
I think, Lynn, we've now heard that from definitely 2, but maybe 3 members that SM3 is a difficult read. So that's something we'll have to take away and clean up.
Yeah, I mean, I think my suggestion would be that we've got time later in the week. And I think actually if staff can work with Mike and Todd and Lynn on that. And sorry, Tricia, I don't know if you're on SMC3 as well, but I think actually clearly that is problematic at the moment. So I think if you can just take that opportunity and then perhaps also have a look at the point that Lynn's made just around the positioning around figure 4, whether, you know, how that interplays with the SMC versus is there just anything additional in the wording that just is needed to clarify. Ross.
Thanks. I just wanted to get a clarification from Lynn on the appendix where we've split the projects between standard setting projects at the front, so the dark blue and gray, where we're talking about things we haven't considered and brought into literature. And then the second part where we call it maintenance, where we're looking at IPSAs that we already have that we may want to update down the line. I wasn't clear from your comment if the issue's in both the SMC and that, and you think we should position that, or if you're okay with how we've done it in the back, we're just not clear enough in the SMC.
So I think it's clearer in the back than it is between figure 4 and the SMC. I think it's how it interplays with figure 4 and the SMC. No.
Thanks for that clarification. Then Patricia.
Yes, thank you. My question is in relation to the SMC2. I think maybe for understand the SMC3, I needed to connect with SMC2 because the text in this version is clear that the plan is not to include, not to add other major projects, but in SMC it's not highlight this because the decision has 2 parts. One part is not adding new major projects, in other part is adding maintenance activities. My suggestion is rephrase the SMC2, and then I think it's help us to connect with SMC3. Thank you.
Okay, thanks for that. So if staff can just work with Patricia on that, and I think, we'll link it, as you say, Patricia, we need to make sure we're clear what information we're seeking through SMC2 versus SMC3. Okay, any other points then on SMCs, Abdullah?
Just a minor point on SMC4, because we are asking constituents after the pre-committed projects, what would their priority be? But thinking about the CP we had on advancing the sustainability, we kind of asked the same question. So where would that fill in that we are asking them again now?
I think from my perspective, and I'll speak for myself, I have a better understanding of what sustainability reporting means now than I did a year ago. Feels like a lot longer. So I think I see your point that it's a similar question to what we asked before, but I think we'd get better information back now that we have, at least I have a better understanding of what I'm asking. So I could point in discussions at roundtables, I could lead the discussion better. I could point to what topics are and what the IPSASB could and couldn't do. And I think if we ask that, it'll help us when we go out again to ask what we should add.
Okay, Todd.
Sorry, I should have raised this earlier. I did have a minor point on SMC1. So on SMC1, we are asking our constituents what they think about the revised objective, but we don't provide the previous objective. And I just wonder whether a footnote with our previous objective would help them to actually see the differences between the revised and the current.
Dave?
I guess I would almost float the idea of not referring to the previous objective. I understand why we did. I don't know. Yeah, my suggestion would be not to refer to the previous objective. This is a new strategy and we should take that out, but Ross, come in.
I think maybe we can fix it with the wording. Instead of talking about our revised objective, say this is our proposed objective.
Yeah, I think that's rather than dig any unnecessary holes. That sounds the way forward. Abdullah,
Yes,
I don't want to get into wordsmithing.
No, just a thing, but that might help. It's just the word to shift that might we work on shift instead of focus instead of shift. That would probably take out it.
Okay. Lucy.
Thank you, Chair. I have concern on SMC4 because we are asking our constituents on the key public sector sustainability reporting issues that the board could consider inclusion in the work program. I'm just thinking of the funding implication if we receive a number of issues that would be given by our constituents. I think we have to have some management of expectations from the constituents that we really cannot deal with all the issues that they might be recommending for inclusion in the work program due to funding constraints. Thank you.
Ross.
Thanks, Lucy. I think that's a good point, but I think the question we're asking here is just we want to know their priorities. We're not committing what we might do with them. I think there's a fine balance between overplaying our funding needs and maybe calling into question the board's ability to deliver it all. So I think maybe that's a point I think we'd be better to make when we're actually proposing that we're going to add more projects to the work program. And we talk about the resources to do that rather than just fact finding through this consultation on what priorities would be through the roundtables and through the consultation. That's just my initial thoughts.
Yeah, probably what you're doing there is hanging on the word consider. So it would be through our normal prioritization process at that point in time. Mike. Sorry, Scott.
No problem. We sat each other. I just wanted to speak in support of comment 4, actually building on Todd's point. anytime we go out to the students, we ought to ask them for information. But more importantly, over the last year, as people's views about sustainability has changed, there's been a lot of movement out there and a lot of, to your point, Dave, a lot of crystallization on what that is. So I'd hate to miss the opportunity to ask that.
Thanks, Scott. So, I mean, I think, you know, we've collected a number of points there, and I think actually if staff can just work with the members concerned, particularly around SMC3 is clearly the problem area at the moment, but it's just making sure that that's positioned then appropriately in the text. And Lynn's point is very relevant there in terms of making sure that, you know, it's clear as far as we can make it, and then we'll get better input on that. So I think, you know, if staff can work on that during the current week, it's clearly a lot easier to do that, and will help also with the finalisation process with the designer.
So Ian, I'm hearing that we'll bring back SMC 2 and 3 and we'll put them up on slides on Friday for our members to look at.
Yeah, I think that would help. You know, particularly I think it's really SMC 3 that we just need to make sure we've rinsed through those issues and we've got clarity. But yeah, if you can put that on a slide for when we come back on Friday, that will be helpful. So I think that wraps up the discussion on the SMCs. Clearly, we've had a lot of editorial comments through the various different processes during the summer. I just wanted to check before we move to an approval on the draft strategy, whether there are any remaining points of substance that would prevent members voting in favour of the strategy that you want to bring up at this point. Lynn.
So I don't know if it's well, it is a point of substance, but I don't know if it's in the work programme or not. And it's on the page that is before the table of contents, where you've got sort of, and it comes immediately up, you know, i.e. page 2, the first page that people see. I think that is still financial reporting focused and is not sufficiently sort of updated for our new focus on sustainability reporting. So for example, when we talk about outputs on recommended practice guidelines, we are limiting ourselves there to financial reporting. When we talk about strategic input, we're not referring to plans around sustainability reference group. And when we talk about funding, we're not referring to the sustainability funding that has been received. I think of ACCA was what came to my mind. So I just wondered if I don't know if it's editorial or not, but I felt that page needed to just have another look at that to make sure it's now holistic for our new mission, as it were.
Okay, I think that's a good point to make. So staff can have a look at that. I'm not sure, Claudia and then Todd.
Thank you. Just a question regarding the figure 4. At first, I would suggest to modify the third gray line, which called other project, and then it's differential reporting and IPSAS handbook included. I would call them different other initiatives instead of project. And the second question, or the proposes figure 4 includes in the first part major standard setting projects. And I will miss the new project for IFRIC adoption on it. I understand in that, but I'm not sure. Maybe it's not a major standard setting project, but maybe it belongs to the maintenance activities, and it's going on properly in the first year in the next year, to complete next year.
Ross.
There's a couple of good points, Claudia. Thanks for raising those. So the work to do the IFRICs wasn't on there because the board hadn't yet approved it, but I'm not sure I would put it as a separate item. I think we'll have to see when we look at it, but it would probably fit under improvements to IPSAS. Because I think that's where we'll probably end up dealing with it, whether it's a narrow scope amendment or not. I think kind of splitting hairs, but I wouldn't say it's a major project whatsoever. So I agree with that. And actually improvements itself, I'd call it a major project because it's ongoing, but each of them is quite minor.
Yeah, I mean, probably it might be worth just reviewing where that improvements line sits actually. Because actually if it becomes a maintenance activity, then I think that would pick up Claudia's point as well. So I think that probably might shift down. Okay. So I'm just going to go around. So Mike, then Todd, then Patricia.
I want to briefly touch on a point which is related to what Lynn said on how is sustainability related information included in that draft. I want to come back on figure 3, where we have that in the middle, that term accrual with that footnote, accrual accounting and sustainability information. I think it's quite too easy to just add that footnote because it, to my mind, does not reflect reality. So I think I had in that bilateral conversation within the last weeks, we had a version where we tried really to put both parts, accrual accounting and sustainability information in that middle, which I think content-wise would be the right solution. So my suggestion was here to arrange that figure in a way that there is really enough space in the middle for both aspects. So if that does not work, the second best solution might be just to have accrual and leave out that footnote, but that would be just the second best solution.
I think we can try to action your best solution. Just for some background, this diagram, even though it ended up looking very similar to what was in the last strategy, went through a number of iterations. So happy to take your best solution and try to fit it in. It looks like we've got more room to expand now.
I mean, on that, I think we do need to be careful on this because there's a difference in status of the information between the actual accrual information and the information on, say, climate-related disclosures. And I think that's, in a sense, that's actually where the second, solution may be more appropriate, because what this is trying to do is actually say information that's actually in the financial system. So the sort of information that we were talking about in the Zurich situation, where it's in budgets, it's actually in the financial statements. And in a sense, there is a difference there, between scenario information, that kind of thing. So I think we do need to be careful not to over elevate the sustainability reporting information. So I think if we can bear that in mind, and that may well argue to what you said was your less ideal situation, but I think it's probably more representative in terms of actually what may happen in practice. Todd, and then Patricia.
Thanks, Ian. I have 3 points to make, and Mike's made one of the points for me. I did react similarly to him in terms of accrual being defined. It was the way that it was in the footnote. So if we can remove that footnote, if I understand where you're going to end up, that will help with that one. I think at the last meeting, I raised a point around the objective, and what wasn't working for me was hanging everything just around PFM, and I made some suggestions then, and I just wanted to raise again, I think we're going to have a stronger objective here if we have PFM and sustainability. What we're trying to strengthen. So we want to strengthen public financial management and sustainable development. And we do that through IPSAS and sustainability reporting standards. And I think that's going to land better with our constituents, because up until now, the narrative has been around strengthening PFM and IPSAS, and to get some language in there around sort of the sustainable development and hence the sustainability reporting standards might just work a bit better, I think, from a constituent perspective. And the other comment I wanted to make, I think comes up on page 8, where we're talking about the application panel. And I just wonder whether we can be a little bit more descriptive about what we mean there, because certainly in reading what's there, you don't get a good idea. And if I'm understanding this panel correctly, it is broadly an advisory panel to the board. So they will do the work and it will all come up to this board in terms of the decision making. And I think to have that level of clarity there is just important for our constituents to understand, because otherwise they might be starting to think this is an IFRIC or something. And I think it's a bit different to the way the IFRIC operates.
Thanks, Todd. Ross, do you want to pick those points up? Maybe Todd's third point, and then we'll go back to.
So thanks, Todd. On your last point, I think you're right. The board will discuss later in the week the application panel and how staff envisions it's working. But I wouldn't disagree with you that it might be better to call it application advisory panel or something, and just add a sentence or two that the panel itself will do work with staff and make recommendations of the board, which the board will consider at each meeting. I don't see a problem with that, assuming members are okay with that in advance of the fact that we're going to have a detailed discussion later in the week, because that's really what the discussion, I think it's Thursday, is all about. It might be Friday.
Okay. I mean, on your points on sustainable development and so on, I mean, I think staff has actually revised the way in which PFM is actually described. And I think, you know, probably what we don't want to do is get ahead of where we might go on sustainability reporting. So we're in it's a sort of balance, and there was quite a lot of discussion about how best to do that. Ross, do you want to just add on that?
Well, just to reflect that this is the consultation, so we're going to hear what people think of what we put out there as well. So I wouldn't personally get too caught up of whether we do it in the footnote or change the objective. I guess it's down to where members are happy. And if I think about the work we've done over the summer, I think generally the objective in there has been really well supported. So I guess the question is, do we need to revise the objective or not holistically?
I mean, at this stage, I think I'd suggest that we leave it as is and we wait and see what comes back. And if people tell us we're not being sufficiently out there, you know, I mean, I think we genuinely do have to just strike a balance at this stage and also not overpromise in terms of what we're going to do at this stage.
If I can just come back briefly, the footnote and the way that we describe things in the footnote doesn't quite work for me either, which is why I'm thinking if we can deal with it at the actual objective level, our objective level, it would work better.
I appreciate that, Todd, but I think at this stage, I think I'd rather leave it as is and then wait and see what we get back by way of comments, because we have had a lot of input from the CAG and the PIC and so on. So I think if we can leave it at that for now and then see the comments that we get back, that's going to be sort of better way to handle it. Okay, so if I can go to Patricia and then to Renee.
Thank you. In relation to the table 4, I think it's important to have the decision about the agenda items 9 to change this table in relation to differential reporting. My suggestion is propose a change in the in this document after the discussion and decision about the agenda item 9. Thank you.
Ross.
Yeah, without delaying the debate, I think this will need to be updated to reflect where the work program is at the end of the week and what the board discusses for all projects. So if there are any other changes, I think we must update it. And I think we've just agreed that improvements probably sits better in proposed maintenance activities rather than projects. So I think we will finalize what goes in this at the end of the week in my final session, which will include whatever we decide in differential reporting. I think it's tomorrow.
Okay, Renee.
Yes, thank you, Chair. I want to react to the conversation between Todd and the rest of the staff on questioning the objective as it relates to PFM. I personally was comfortable with the reference to sustainability as part of PFM, because when we observe how the IMF is currently evolving the definition of PFM, they are also evolving their thinking. They're talking about green PFM, which is a PFM that will going forward be recognizing the need for climate sensitive policies. So maybe what we do is we acknowledge this moving target, and maybe in the footnote that could resolve the issue. We could in the footnote acknowledge that PFM is being broadened in parallel with our own thinking and wait for constituents feedback to that. But to me, it holds itself together. I see the logic.
Okay. I mean, I think on this, you're right to emphasize the point about the fact, Renee, this is a moving target. And I think deliberately what we tried to do is pick up essentially the existing definition and add sustainability into that. Can we leave it as is for now? We will have to come back to this in the light of the comments that we receive. This is a draft that we're going to get input on, but I think, you know, what you can see is we're getting a number of different perspectives, and actually we need to land this and we need to get this out. So I think, you know, I do certainly agree with you on that, and that was partly in my mind when this discussion was going backwards and forwards in the summer. So I think without overcomplicating, if we can just go with what we've got at the moment and then get feedback on it. Nima, final comment, and then I'm going to ask us just to give approval subject to those final bits of drafting, because I think we're refining rather than changing. Nima?
Thank you very much, Chair. In relation to the financial reporting projects, I can see the page where we are starting introducing the research and maintenance activities, which are also mentioned in SMC2. Now, the Appendix 1, we're referring to the same maintenance and research activities. So maybe to twist it to research and maintenance activities on the first para, but we're giving the potential maintenance projects. Now, I was wondering whether we can give the potential areas of research, even though we've stated in the last para that the academic research will be commissioned through the academic advisory group, but maybe there are professional research if we can think of and put a sample like what we've done in the potential maintenance projects. Thank you, Chair.
The reason that we didn't provide summaries of the research projects is we don't know what we don't know yet. So we need to go out to the academic advisory group and understand what the issues are. So we didn't think we had enough information to summarize anything in the research areas yet.
Okay, so I think we have some pieces of work to do around particularly SMC3, but also the linkage with SMC2. And then I think Lynn's point in terms of the description, and we've clearly got a bit of refinement to do on figure 4. So I would suggest that actually staff bring back those SMC 2 and 3 rewords. We'll conclude on where that line, those 2 lines sit in figure 4 in the light of the discussion that we have about differential reporting later in the week. And there are various pieces of drafting that have been indicated, but none of them are substantive. So at this stage, with a view to the fact that we do need to get this out to the round tables, what I'd like to do is actually just ask for whether members approve or not the draft strategy to move it out to consultation. So Ross, if you take us through that.
So similar to the vote we just had, I'll first ask for those who vote for to please raise your flag. And then we'll do any who vote against, which hopefully we don't have, and any abstentions. So those who vote for, please raise your flags. So I'm seeing 18 votes for. I'm counting right. Sorry, no, I'm sorry, 17 for. So everyone who votes for, please put your flags down. Those who vote against, please raise your flag. One vote against.
Okay, so with that, we approve the strategy for consultation, the draft strategy for consultation, subject to those changes to SMCs and also to refining figure 4, then in the light of the discussions we have later on in the week. So thanks, everybody. With that, we break for lunch and then we will come back after lunch and we will move into other lease time arrangements. Thank you. If Leah can just tell us where lunch is going to be.
So the lunch for everybody staying in the hotel, it's where you have breakfast. For those who aren't staying here, it's across the lobby
Hello. Yeah.
Okay, so welcome back, everybody. We're now going to move into other lease type arrangements. A lot of work, I think, been going on, staff and the task force over the summer in terms of analysing the comments that we received, and that's in accordance with the instructions. Lynn, as task force chair, is there anything you'd like to say before we go into the item?
Well, a couple of things, I guess, really. Thanks to the task force who have worked during the summer break, and thanks to Joao in terms of his input as well. You'll see from the papers we've got some kind of like matters of principle to bring back to the board in the first instance, just so that we can help shape our direction on the way forward on the project. So hopefully we can get those decisions made so that we can then see this through to dealing with the final few comments. But that's all I was going to say at this stage.
Okay, thanks then. Joao, to you.
Yeah. Thanks, Ian, and thanks, Lynn, for those comments. And I'd like to retribute my thank you from the staff to the task force for the 2 task force meetings that we had, one at the June meeting and the other one in late August, and for all their comments and very helpful suggestions to the issues papers that it is now in front of the board. So my big thank you. So this is the first time that staff and task force brings quite a detailed review of responses for the first time to this board. And as Lynn said, we are now trying to address issues of principle. And we'll have also another task force meeting during this week and to kickstart for the last quarter of this year. So without further ado, jumping into the agenda item 6. So staff and the task force thought it would be useful to give a brief explanation to the board of how we approach to the very diversified comments that we have received, and following also the IPSASB instructions at the June meeting. So we have 3 groups of respondents. The ones that basically agree and they don't provide any further suggestions or comments. The ones that partially agree, which means that they agree with the principles, but they have made several suggestions to improve, to enhance the proposals in ED 84. And the third group, the ones that disagree with the principles. So based on these 3 groups, what staff and the task force did, okay, let's first then address the ones that disagree with the principles, as also instructed by the board at the June meeting. And those are in the papers that are there. And then what we did was, okay, let's then identify those comments and suggestions to enhance ED 84 proposals. And what it is curious is that some respondents that disagree with the principles in ED 84, they said that if the board proceeds with the proposals, they made several suggestions on how to enhance those proposals, which is also in that light green arrow. So all in all, we have a group then all those suggestions there, and we have identified them in the appendix in the respective agenda papers. And as at that time, the new standards on management, revenue, and expenses were not yet approved. So many respondents suggested for us to take a look how the ED 84 proposals would relate with the new standards that were published after. And with this, we were already bringing some topics also to this meeting, but there are others that we will bring at a later meeting. So it's so many topics, so we need to eat the elephant bite by bite, as they say. And with this, I want to stop here. Ian, I don't know if the board wants to make any comment before proceeding then to the specific agenda items.
Anybody wants to make any observations at this stage in terms of overall approach? Okay, lead us into the first item then, Joao.
Okay, thank you. So the first agenda item 6.2.2. Staff and the task force thought it would be useful to have a specific agenda item on this conceptual rationale, because there were many respondents that disagreed. They disagreed on conceptual reasons, and the detailed analyses are in the papers. I will not go through the detailed analysis; it's there, but I'll just highlight what was their main concerns and where the staff and task force landed. So the first reason was that there is an inconsistency in accounting of the subsidy between the lessee and the lessor. They disagreed with that because there is a lack of consistency between lessee and lessor accounting. So the models that we have now in IPSAS 43. So, but where we land is that, okay, it's outside of the scope of this project to revisit the models that we currently have in IPSAS 43. So, and that's where we landed in this first bullet in this item. Then the second reason was there were some respondents made analogies with other transactions and arrangements. Some saying that it is consistent and it shouldn't be, others the other way around. So where we landed is that when they make analogies with service concessions and leases, well, they have different economics. So staff and task force provided a diagram in the papers where we highlight those reasons, and therefore, the analogy does not hold. Regarding with concessionary loans, the arguments that they raised for us, it was not sufficiently strong enough, because whether you give a cash with a concession or we give something in kind, it's always a subsidy to the price of the resource, and that's where we landed. The last item from the lessor side, they also contested from concessionary finance leases and concessionary operating leases. But then again, what the 84 proposals were making is following the principles that we have now for the derecognition of assets in terms of finance lease, because it is considered as a sale in a finance lease. And in operating lease, they disagree because it shouldn't be any impairment. But well, once again, we are not revisiting the standard on impairments. So all these analyses led us to completely be out of the objective of the scope of what we were proposing. And the principles that we now have in our current literature are consistent with the ED 84 proposals. And with these, our recommendation to this board is to reaffirm the conceptual rationale that underpins ED 84 proposals. And I'll stop here, Ian, to receive the board's feedback on this topic. Thank you.
Okay, thank you, Joao, for that introduction. So open for comments on the recommendation from staff. Patricia, and then Camilla.
Yes, thank you. I agree with this recommendation, but for only in this case that concession can be measured. In this case, because I think there are different transactions. In some cases, there are transactions similar, the same or similar transactions in the market, and it is possible to measure the concession, but in other cases not. And what justifies to recognize the right of use is because the liability can be measured. Then in my view, we should to consider two different transactions, not the same rationale for transaction with different design, different structure. Yeah, it's my. Go ahead.
So maybe I'll take Camira's question and then go back to you, Joao.
Thank you, Chair. Thank you, Joao. I agree with the staff recommendation. I only have a suggestion for one of the issues that was raised. So for the lack of consistency between lessee and lessor, when they say, well, the underlying asset is not recognized by either party when there is a concessionary finance lease. So I agree it is outside the scope of this project, but can we have a track or something that is something that to be done, this analysis? So there's an issue that should be solved in the future, not in this project, but in the future. And the second comment is on the table. I don't know if that table on paragraph 18 that compares service concessions and lease will be used also in the final pronouncement or something. If yes, in the column of lease, I suggest to include the distinction between for the lessor between operating lease and finance lease for completeness. So thanks.
Thank you. So, Joao, back to you.
Yeah, starting with the last, with Camira and with the last suggestion. Yes, we have already a diagram with the operating finance lease, but we thought it would be kind of more complex than what would be needed for the purpose here. And well, I will discuss with the task force, and we can perfectly include this diagram in a illustrative implementation guidance or something, because it is not only related to 43, it's also the relationship with other standards, and we can, I think, perfectly discuss that suggestion. Regarding to the future of the lease accounting models in IPSAS 43, well, that is, I think, beyond of what I can say here, because it's not within the scope of this project, and it would imply a completely revisit of IPSAS 43, which I don't see in the near future. So I don't know here, and Ross have any views on that?
Well, no, I mean, I think, you know, we went forward, and what is stated in IPSAS 43 is that after quite a lot of debate and deliberation, we ended up saying, well, you know, we weren't, you know, particularly happy with the two models in 43, but it was, if you like, the least worst option when we went through. And I think, you know, there's no sign that ISB are likely to pick this up and go for a consistent right of use model for lessors. So I think, you know, we're stuck with that and the imperfections that go with that. But probably what goes with this is actually being clearer, you know, about the implications of that, particularly in this area. Ross, I don't know whether you want to add to that.
Not to add much, other than I think it would be useful to capture that the reason we don't have the consistent counting on that is because of ED64. That was one of the main reasons we had that original proposal model, and we moved away from that. That was a conscious decision. So if you go back to ED64, we had the dual model where we had consistency between lessor and lessee, and somebody would always have control of the asset, didn't disappear. So we spent a lot of time on that. And the board made the decision in 2019 after the responses to that to not follow that model. So I don't think it's something we're going to come back to, but we should capture that in the thinking as one of the reasons why we're not responding to that comment, because it's not, you know, out of context, it looks like we're ignoring it, but we're not. We've tried to go down that path. We had a comprehensive exposure on that, and we went a different way.
Yeah, thanks. Yeah, so back to you. Yeah.
Yeah, thanks. So answering to Patricia's comment, yes, some of the respondents did suggest kind of redrafting by making more clear that we are addressing two transactions, one related to the concession, the other one related to the lease. Even many made consistent suggestions in enhancing even the diagrams that we've developed in the 84 along those lines. So that's what I can say for now.
Okay. Todd.
Thanks, Ian. And I think I'm building a little bit on what Patricia was saying, just in terms of conceptually. I do struggle with some of these transactions that come within the concessionary lease umbrella and coming up with a concession amount. There will be a lot of leases, straightforward ones with buildings, an administrative type building. Yes, I can buy into some of those arguments, but there are a lot of other things that I think meet the definition of a lease, and going down this path just conceptually doesn't make a lot of sense in my mind. And I think part of my issue is the leasing standard itself is essentially built around sort of it's a way of financing assets. And a lot of these things that are documented as leases, certainly in our jurisdiction, that isn't the underlying basis for what's going on. It is, there's a service to be delivered. This party will deliver that service. And so we will document it as a lease, and they can have it for zero nominal amount or whatever's agreed. And there's something that doesn't work for me conceptually for those, and trying to force them into this.
I guess we have to though come back to the scope of what we were doing with this project, which was taking IPSAS 43 lease accounting model and applying it to those types of arrangements. We weren't reopening the accounting model. So I'm not sure, Todd, what you're suggesting we would do instead.
Ross, do you want to come in before I go? Or yeah, okay, and then I'll go back to you, Todd.
Yeah, I completely agree with Lynn. And I think the reason we did that is because there's a very tight definition of what's a lease coming from IFRS 16. It must be a contract, and you must get all the rights and benefits of full economic control of that right of use asset for the period of the lease. So if you don't have things that meet that definition, they're not a lease. So you'd actually be in the new revenue accounting standard, where you would look at your arrangement, the lease, whatever that is. If you're not getting if it's not a contractual, it could be a binding arrangement. And if you're not getting the full rights to use that, it's just an access right, then you look at your binding arrangement and you look at your performance obligations and you account for them. So I don't think there's a big gap here. Now that we've got the new modern revenue standard, I think we're kind of searching for a problem a little bit. Probably the problem is you shouldn't be calling things leases that don't meet the definition of a lease.
I mean, one of the things that sort of reflecting on this, I wonder whether we shouldn't consider is actually, we did a lot of good analysis in response to the request for information, and there's a lot of good thinking in that feedback statement. And what we may wish to do is actually add some additional examples which actually essentially address those in, because it's not a great stretch from where we are, what we had in the feedback statement that could actually help people understand where, if you don't have something that meets the definition of a lease in IPSAS 43, here's how you would account for it under IPSAS 47. So we're kind of actually giving them somewhere, some guidance on how you would approach that situation, and that might help, given that we've got the confines as Lynn and Ross have reminded us of, IPSAS 43 and what is a lease. That was the decision that we made. Todd.
It might be a matter of thinking about it at the scope sort of level and being really clear. It may be that we need greater, application guidance or implementation guidance examples or something, but that is a big concern. And if you then argue that it falls outside of the definition of a lease, and we haven't dealt with that in our literature and our standard, where are people going to end up in terms of working through IPSAS 3? And if they end up basically needing to follow something similar, then I'll have a problem with that as well, because there are some real issues, I think, in here that we haven't properly thought through, if that's where they're going to end up, which just doesn't add up.
I mean, it's interesting just sort of following up on that, because I think there were a few resonances of that in some of the Q&A that we had this morning around, you know, the emerging experience in Zurich in terms of leases. And, you know, if you had been on IPSAS 13, you moved to IPSAS 43, was there anything that was going to fall outside? And I think the conclusion from that was no. But I think what we're trying to do here is actually say that there maybe are a broader range of issues that people kind of have thought of as leases in the public sector, but we're saying, well, tightly we define them as this, therefore we may need to actually provide some additional guidance elsewhere, which says if it isn't here, here's how you might treat it. And the obvious example probably would be the example that came up earlier on today, which was the sort of internal property leases, you know, which aren't really leases, they're just an agreement that will pay you a certain amount and you'll give us some offices type of, and the rest of it. So, you know, and that was one of the situations that we covered in the feedback statement. And that's where I'm thinking that actually, without too much of a stretch, actually, we could probably actually add, you know, develop some examples which would actually help people with that. So how we would signpost those and where we would signpost that, I think that's something perhaps for the task force to have a look at. But clearly it would help people if we did actually say, look, we've listened and here are some examples that would actually help you think, well, okay, you know, if I've got that's not a contract, actually, you know, I'd account for it under IPSAS 47. Here's the example.
I think that might help the board as well to actually get some of those examples in front of us and be able to work them through and hopefully collectively conclude that it makes sense, because I think that's some of the noise. And if we can reduce the noise by agreeing that and then agreeing to greater guidance, etc., and providing a pathway for people so that they understand what's expected, that might get us there.
João, you wanted to come back?
Yes, thanks, Todd. So I'm really happy for what you are saying, because what you are saying resonates with what many respondents asked in terms of enhancements to the 84 proposals. They are asking for more illustrative examples, for more application guidance in implementation guidance. So, and that's part of those identification of respondent suggestions that we've talked earlier. So it's in those appendixes. So the task force and staff are planning to bring those enhancements here to the rest of it. Thanks for that, Todd.
So I think in doing that, I think it would be helpful though if we go back and have a look at what's in the feedback statement, because I think what we don't want to do is provide a multiplicity of examples that then actually end up obscuring. But actually, when you look at the fact patterns that we have as a result of that analysis, I think there are probably, you know, 3 or 4 different situations there which would readily turn into an implementation example. And that would help in terms of explaining what we're talking about, but also potentially give you know, constituents a simpler approach that they could apply in those situations. Claudia, having fingered Zurich earlier on.
I would add on what Todd is saying and what we heard yesterday. I think the majority of the problems comes with the distinctions in what it's a binding arrangement and what it's a contract. Because this concept, even if you're knowing in the past, but for realizing that it's in this standard, we need only contracts, and for the others are binding arrangement, have to be trained, have to really look in the contracts or in the arrangements, contracts, to figure out what it is. Like you said, it's not how it's labeled, what is the substance of this arrangement, even if it's called a lease or rental or whatever, we have to figure out what it is, and maybe there our stakeholders need a little bit more supporting training material, how really to distinguish in a public sector way this governmental agreements and other two agencies, if these are contracts or only binding arrangements. I'm not sure if it's for an illustrated example or maybe training material.
I mean, maybe, so perhaps just sort of, if you like, trying to synthesize this. So I think what you were saying, Claudia, is there is a question here, which is, you know, is there anything that we need to add, you know, based on, if we go back to what people said in response to our request for information, I think we did a lot of analysis there in the RFI. I think the question is there anything that comes from that where we should actually think about adding anything in terms of what is a contract to IPSAS 43? It seems to me that a lot of the rest of the guidance, although we might need to signpost it from IPSAS 43, might well end up as applying the revenue standard in situations that are non-contractual. And then we should again look back at the way in which we provided the feedback and just see what additional guidance we might apply, given that IPSAS 47 is now out there and approved. What it is, you know, are there additional examples that slot in there? Does that seem a reasonable example of where we go? Because I do think we need to help constituents and we need to think about the signposting from 43 to 47. Just sort of looking really at Lynn and Joao, is that a reasonable way forward from the task? I don't want to give the task force something impossible to do.
No, I think that's fine. I would just, I guess what we also need to do there, I think I'm not hearing anyone disagree with the recommendation. So I think we take the recommendation as approved and draw a line on reopening accounting models. We did have a series of papers that came following from the RFI on different examples. And what we can now do is take some of those and make sure they're positioned in the right place on things like access rights and the like, to make sure they're positioned in the right place to help our constituents. And it's been really helpful feedback to do that. But, you know, as long as we are all agreed we're not reopening the accounting model, which the recommendation is not to reopen the accounting model.
Thanks, Lynn. Tricia, you're disagreeing with that recommendation?
Partially. My question is different from the question arise for Todd, because my question is, if is a contract, if it's a lease contract, I have two different transactions. One, it's possible to measure the, to identify, I think not only measure, it's possible to identify the concession. In the other situations, no. For example, when I have a specialized assets and I don't have market for this type of leases, and then I don't have how to measure the concession, to identify the concession. In this case, I think this rationale is not applicable for this case, is my question here.
I thought you were probably going somewhere else, which is, I think nobody is actually, I think if we reaffirm that the actual rationale is appropriate, that we maintain, you know, the IPSAS 43 approach, then there becomes a practical question, which I think is what you're actually referring to there, Patricia, which is actually one around information and measurement. And that's probably more where we have the discussion in terms of how you would go about it and what you would do in that circumstance. Dave?
Maybe I interpreted it a little differently. So it just sounded to me like you thought there might be a way to bifurcate types of concessionary leases. And if that's what you're proposing, that sounds like a really, maybe an interesting approach, but it seems not where we are in the project. I think we've exposed something, and I think I didn't thinking, I guess, but maybe I misunderstood the comment.
Well, I think so. Just back to my summary, I think, Tricia, what I understood is there are certain situations where there's an information issue that you don't have. And I think that's different to conceptually, should we reopen the leases model? And I think nobody's suggesting that. So we're good as far as that's concerned. I think maybe what we need to come back to, and I think we will come back to this, is there is actually a measurement issue potentially lurking in here. And actually that's probably where we need to actually have this discussion. If that's okay, Patricia. So I think, in terms of the overall recommendation on affirming the conceptual rationale, I think we've got to agreement that we do affirm that. We've got the work to do, though, as we've agreed, in terms of actually making sure that we provided adequate guidance and that that's accessible for the situations where you have something that feels like a lease but actually isn't. And that's where we go back to what we did in the feedback statement and build on that and make sure we've got the appropriate guidance. Whether we need anything additional on contracts to do that, and then think about the other. So I think we've got there on that item. So I think we will come back at the appropriate point to your point, Patricia. Okay, so with that, move us on to the next item.
Yeah, thanks, Ian. Thanks to the board for the very good discussion. So task force and staff will carry forward with the instructions. So the second agenda item on the scope, which is agenda item 6.2.3. So some respondents disagreed once again with ED84 proposals, and they brought scoping issues for those disagreements. So the agenda item has a kind of a more or less extensive table and with an appendix. So we'll not go through all of them. I just summarize here where we landed as staff and task force. So some of them were of the view, well, taking into consideration the discussion that we had here of modifying the definition of a lease and contract to bring binding arrangements that are not contractually based. Some of them provide asking for guidance on scoping by inclusion or exclusion certain types of entities to which this standard would be applicable. Although these two types of reasons, we thought that, well, this is outside of the scope of ED84, because then it would in the end apply not only to concessionary leases, but to all leases, because the scoping section of the standard would apply to all leases. So, and because of that, and also by providing additional scope exclusion to specific entities, we are of the view that it would impair accountability and decision-making at entity level, because after all, in the public sector, the accountability mechanism is always at entity level, although we might also have a super entity that might control everyone, but the accountability mechanism should always start from the entity level. Because that's where the managers take decisions and constituents are looking forward to analyze that information. And the fourth reason is to provide guidance on the right of use assets for nominal or zero consideration in a single IPSAS. So as you know, ED84 provides changes to IPSAS 23 and to IPSAS 43. And this response suggested to have all guidance in a single IPSAS. So, and we thought that, this is normal in our standards where we have specific standards that address specific principles. And if there are other standards that need to draw from those principles, instead of replicating the guidance, we just cross-refer. So that's why we say that cross-referencing is normal in IPSAS. But then again, staff and task force will take a look at if we are able to enhance and the signposting along these that might also be related to many of the suggestions that we received to improve the 84 proposals. So, and with this, our recommendation is to proceed with the 84 proposals on scope that it was already proposed for the final pronouncement. With this, I'll open the floor to the board again.
Thank you, João. So comments, please. Lucy.
Thank you, Chair. Thank you, João, for the presentation. Actually, I partially agree with the staff and task force recommendation to proceed with the scope of ED 84 for the final pronouncement. However, I noticed that most of the issues gathered from respondents consist of a proposal to add subtopics, which were subsequently not considered by the staff during the analysis process. But I think in line with this, I would like to suggest that there should be a revision in the scope to add a statement regarding those subtopics which were analyzed and found to be outside the scope of ED 84, because I think this will provide additional context for future users who might come up with the same issues during implementation. Thank you.
Thank you. I'll take Camira and then come back to you, João.
Thanks, Chair. I have a comment on relation to one of the respondents' issues that was asking for more guidance on IPSAS 23, the distinction of conditions and so on. I was wondering, because I know at the time when we published the exposure draft, there was not IPSAS 47 and IPSAS 48. Should we update this exposure draft according to IPSAS 47 and IPSAS 48 and ignoring IPSAS 23? Because I saw also later in the agenda papers that maybe this staff was planning to have like guidance on IPSAS 23, guidance on IPSAS 47, and it might be too complex. Should we forget completely about IPSAS 23 and focus on the new standards instead? So thanks.
João.
Yeah, thanks, Lucy and Camila, for those questions. So, well, once again, you hit the nail, Lucy. So it's part of the work that staff and the task force will be doing in the last quarter, because many respondents asked for more guidance in the implementation guidance, illustrative examples precisely on those topics, and those are identified in the appendix that we brought here. So it is not forgotten. So we'll be addressing those as soon as we agree on the topics that we are here for the December meeting. We'll be addressing all those recommendations that they gave. So regarding the IPSAS 47, I would prefer to leave your response for the agenda item, because we have one specific one, and then I can give a more, how to say, proper answer and with a proper context. So please hold on me on this. Thank you.
So to Lucy's point, though, I mean, I guess the question is what we need to guard against is providing a proliferation of illustrative examples. And I think the question is actually, on Lucy's point, are there some specific issues that have not already been covered in the RFI analysis and the feedback statement? And I think that's the question really. Is there anything else that's come through this process that we actually need to consider whether we provide any, anything through IG or IE? And I don't know, Lucy, back to you, are there some specific things that you'd seen in the responses that you had in mind?
Actually, it would be a general statement that may be added in the scope, because there has been an analysis of the issues or the additional topics that they want included, but you found them as outside the scope of ED 84. So I think this has to be clarified in the scope, so that this would also provide the context to future users, that when they implement the final pronouncements, this these subtopics that were proposed by the respondents are really without outside the scope of AD 84. Plus, of course, because I also look forward to the further analysis on the additional issues that were raised by the respondents in future meetings. Thank you.
Yeah. So what I can say is I'll engage with you, Lucy. As soon as the task force and staff addresses this, I'll reach out to you to see if it was addressed according to what you've just now raised. Yeah, thank you.
Yeah, I think we'll need a recommendation then, and in terms of it would feel wrong to actually modify the overall scope of IPSAS 43. I think the question then is how we deal with this in terms of, do you provide anything in application guidance? Is it through basis for conclusions? What are the options there for us in terms of communicating that? What's the appropriate way to do that? So if we can go down that route, and I think that's where we'll ask for the, for the recommendation back. So Noyati.
Thank you. Actually, I just want to ask for clarification about there's a respondent issues on provide guidance on right of use assets for nominal or zero consideration in a single standard. So we know that the feedback is the cross-referencing is normal in IPSAS. So actually, what does it mean? Because actually, is it inside you will develop that particular guidance in this standard, or you have to refer to other IPSAS as well?
Yeah, sorry. Yeah. So the basic principle, yeah, thanks for that question, Noriat, and happy to respond on that. So the basic principle is that when we developed ED84 was based on this. The transaction, the concessionary leases that meet the definition of a lease, that guidance will be under IPSAS 43. Those arrangements that convey the right to use but do not meet the definition of a lease, they would be within the scope of the revenue standard. And that's why we've proposed in ED84 amendments to IPSAS 23, because it was the standard that we had there. On top of this, because there are some elements that for arrangements that do not meet the definition of a lease, but convey the right to use in a very unspecified ways, just like it was described by Claudia's colleagues, but nevertheless, it's a kind of a right of the use, but it is not a lease. We are also providing in IPSAS 23 a cross-referencing that they can draw from the principles that are in IPSAS 43 on how to identify parts of those arrangements. So if they want to have enough specificity of what it is a right of the use, to identify that right of the use. So we basically make cross-references. And another example is in terms of measurement. We are also providing the same measurement in IPSAS 23 as it is in IPSAS 43 for concessionary leases. So that's where we said, okay, we put in each standard what it is specific to each standard, and if there is a need for cross-reference, we'll do it. So that's where we landed. Thanks. Yeah.
Okay, so thanks for that. So I think overall, we're agreeing with staff proposals to proceed on scope. We're not, and that the guidance would be placed according to your summary. I think there's the point that Lucy made in terms of we need to reflect on where anything that is out of scope, how we provide that clear, that statement and that signposting. So the question is then whether it's AG, whether it's basis for conclusions or whatever, and that's what I think we need recommendations back from the task force on. Okay. So move us on.
Thanks, Ian, and thanks to the board for the very good suggestions. So moving forward, next agenda item. So the first agenda item that we are addressing a specific matter for comment. In this case, the specific matter for comment number 2 about concessionary leases for lessors. One of the reasons that once again these respondents disagreed with The proposal for lessors was one of the reasons that it was already here discussed, is that in a concessionary finance lease, the underlying asset should not be derecognized if it continues to embody service potential. Also inconsistent accounting with loss of concessionary finance lease and no loss in a concessionary operating lease. So all these are related to the lease accounting models, because we have two different accounting models, and once again, it's outside of the scope of the phase 2 of the project to amend lessor accounting models. And in the case of the concessionary finance lease, the derecognition criteria is consistent with what we have in currently in our literature. I should stress this out because, and I think this will be part of the enhancements of the BCs, is that derecognition of the asset, it's not lease accounting. It's outside of IPSAS 43. It was never also under IPSAS 13. The derecognition of the underlying asset in a finance lease was always within the scope of IPSAS 16, 17, and 45. So the IPSAS 13 and IPSAS 43 only deals with the lease accounting, not with the derecognition. So, and I think this needs to be, or the same, perhaps more spelled out in the BCs on this. And another comment was that from the lessor side, because the derecognition of the underlying asset in a concessionary finance lease is made at the carrying amount of the underlying asset, there is a lack of information on the foregone revenue for disclosures. So in this case, it's about the disclosures. So this respondent disagreed with the proposal, because in his view, the foregone revenue should be disclosed. So I should clarify here two things. So the 84 proposals require disclosures related to the accounting model, not beyond of the accounting model. But that is not to say that if the preparers feel the need that they have relevant information, they should not provide. Actually, in the disclosures that we provide for finance leases, we have kind of a qualitative generic disclosure item, paragraph or subparagraph that permits constituents to put more information if they want this about the nature, amounts, and so on, if they want to go through here. So the basic rationale at the time, the board was that if we are not using that information for the accounting, it would be a kind of an excessive burden to force preparers to find the information that in the end would not be used for the accounting. But once again, it's not forbidden if they want. So these are the only three basic responses that we got, and with these we recommend the board to continue with the ED84 proposals for concessionary leases for lessors. Before opening the board, so related to this topic, there is still one topic that staff and the task force will bring for the December meeting, which is the relationship with IPSAS 48 on transfer expenses. So we are not here to discuss that there. So I just want to highlight that. We'll have a meeting this Thursday, and then we'll have an item, as it was also in the papers, on that for the December meeting. So it is only about disclosures that we are talking about here. Thank you.
Okay, thank you, Jean. So open for comments on that recommendation. Yeah, Patricia.
Not about the recommendation, but about the last affirmation from John. This model will be revisited when we discuss transfer expense. Yes, because I think the answers for the comment it's okay, but when you consider the transfer expense IPSAS, maybe I think, because can I explain? If I can identify the concession,
on transfer expenses, that's an analysis that's going to come back next time.
Okay,
so,
it's only to confirm this. It's I don't decide in this moment. You decide after when I discuss transfer expense. Okay, thank you.
So with that, I think I'm not seeing any flags raised, so I think we're content with staff's recommendation there. And then, yes, we come back with a transfer expense issue for next time round.
Okay, thanks, Ian, and thanks the board for the agreement. So moving forward, so before moving, so if the IPSASB then agrees with the task force recommendation, so the respondent suggestions that are in Appendix A will be brought for IPSASB's consideration in future meetings. So in this case, in December, together with the transfer expenses. So because we have precisely identified them. Okay, agenda item 6.2.5. So in this case, if you've noticed, it's quite extensive and detailed items. So we thought that we'd bring kind of a more high level than going through all of them, and the group where the staff and task force landed. So all those reasons for disagreement that are in the table in the short paper, they are grouped in these four where we landed. So the task force and staff thought that the reasons for the disagreement are or jurisdiction specific, and we have identified other jurisdictions where the situation didn't apply, or were considered by the IPSASB during the development of ED84, but they were not strong enough for us to move from where the board was at the time, or they are inconsistent with IPSASB's literature, and some of them even kind of recommended reassess other literature because of those reasons. We thought that that would not be appropriate. Or that can be addressed through additional guidance in the final pronouncement. So what it was interesting is that some of what these respondents or reasons for disagreement, for other respondents or not reasons for disagreement, much by the contrary, what we would need is enhancements in the D84 proposals to clarify those principles, which we found kind of reassuring on where we are now. So with this, our recommendation is to proceed with the ED84 proposals for concessionary leases for lessees and right of uses in kind. And these will close SMCs 2, 3, and 4 because these respondents asked interchangeably. So although we ask 3 questions, but many of them are grouped in a single question, in a single answer, all the response to the 3 SMCs, and that's why we are now providing in a single paper our recommendation. In this case, it would impact the SMCs 2 and 3 and 4. With this, open the floor to the board if they have any further comments on the recommendation. Thank you.
Thanks, João. So a lot there. Any comments on the analysis or the proposed way forward? Patricia.
I think this some points here is not only enhanced, but it's a principle. Mainly these some points related to the measurement, like 1.16, 1.18, 1.6. When I discuss what is current use of market value, and if operation or financial capacities, I think it's about the principles. It's not about the enhance, the pronouncement. Thank you.
Thanks for that. So actually, it is interesting you're saying that because I also had the same when I read the responses. Well, okay, this is a matter of principle, but the issue is that when they talk about that, so it is not in the context of disagreeing, it is in the context of what you've just now identified as enhancements with the 84 proposals, and some of those are not outside. Outside of our scope, because it is very much within the scope of measurement, as you said. And some of those topics will be discussed later during this meeting about the financial capacity, operating capacity of right of use assets. So we are not, once again, we are not discussing that topic now. It's outside of that. And of course, it is about principle, but in a separate session.
Okay. Liang.
Thanks, Chair. Actually, when I read those disagreement in the paper, actually, I can see that quite a few responses mention about the cost benefit reasons. I can think about it that in practice, maybe in many cases, people may not be able to obtain the market rate for concessionary lease, even use reasonable efforts and costs. So I just wonder whether we can provide some guidance, or say not guidance. We can provide some something like that in exceptional cases when entity cannot obtain the market rate for the lease. It can use the cost, just the payment, contractual payment to measure the lease. So this is my suggestion. Thank you.
Thank you, Liang. I mean, in some respects, that sounded like there was some resonances there with the point that Patricia raised earlier. So I think clearly, you know, this does come into that further consideration that, as João said, we need to have in the context of measurement. And I think that, you know, that's worthwhile having the discussion there. Todd.
You made the observation that I was going to in terms of connecting up what Liang was saying to Patricia, and I would add my support to it. I think that would really help.
Okay, so I think there's a specific action there which, you know, links those two then for when we think about the measurement side of it. Any other points anybody wants to raise at this stage? Okay, so I think we're agreeing then with the overall way forward, subject to that that particular issue on measurement.
Yeah, thanks. And so once again, the appendix that it is in the papers with the respondent suggestions will be brought forward for at later meetings on one by one what it will be addressed, together with this one, the instruction that will be held on the measurement session. So moving forward, so agenda item 6.2.6, linkages with IPSAS 46 and phase 2 of the measurement project. So here we have two types of things that we could identify from the respondents. The first one, of course, once again, IPSAS 46 didn't exist at the time of the 84 proposals. So we are analyzing something after the fact and how can we compatibilize with the proposals and reassess that. So there were three reasons that are there that respondents disagreed with the proposal. The first one is that ED84 does not use the fair value measurement basis. They thought that it should use a fair value measurement basis, not going down to a technique, but going up a level in terms of the usage of the measurement. And the second one was usage of the term cost, because IPSAS 46 talks about historical cost, doesn't talk about cost. So it's kind of more a drafting terminology. And the other one, I think it is more substantive and is related to the first one, which is the usage of deemed cost for non-exchange transactions. So what Staff and Task Force landed was that once again, this goes to the how to say to signposting of where the board landed and explain that in the BCs. So the ED84 proposals propose to measure concessionary leases with a present value technique. So and the present value technique is already consistent with IFRS 16 and IPSAS 43. So when you read IPSAS 43, you say it's measured at cost, and the cost, how do you measure cost? As present value. So it has a present value technique. I'll just start here because this is important. So so they have, because leases is such a specific transaction, it was required to develop a specific technique, that specific transaction. If they would stay at a measurement basis, then we would have difficulties because people would apply that measurement basis in a different ways. So by providing a very specific measurement technique on how to measure a lease, it would ensure comparability between entities in applying the standard. And that measurement technique, present value, was carried over to ED84 proposals. So we have the same measurement technique. The other side of the rest of the measurement that it was carried over there was that, okay, we cannot use contractual payments because contractual payments do not reflect the substance of the transaction. So what the board added was present value of market lease payments to try to capture what would be the market lease payments for that very same transaction and not the contractual rate. So in a way, it is consistent with IPSAS 43 and also IPSAS 46, because IPSAS 46 says in one of the paragraphs that specific IPSAS may apply specific measurement technique according to the specific transaction that it is dealing with, because that would better reflect the economics of the transaction. So once again, IPSAS 46 is a generic standard, doesn't talk about all the transactions. That's why we have specific standard on leases. So going to the fair value issue and the deemed cost. So in conversation that I had with Dave and Agustina, so deemed cost is kind of used as a proxy from fair value, and what we are helping even more with constituents is that, okay, we acknowledge that we are not talking about deemed cost, we are not talking about fair value, because we are going down one level. We are going to the specific on how to measure a non-exchange transaction in leases, period. So it's not that we are inconsistent, much by the contrary, we are consistent with the principles of those measurement bases, but applying those principles specifically into this transaction. And once again, and they are consistent with the IPSAS 43 and the IPSAS 46. The other reasons, which have already, Patricia has already alluded to, it's okay, how these make sense with the phase 2 of measurement project and the applicability of COV. So once again, we decided this is better discussed within the scope of measurement, because it impacts not only leases, but it impacts the whole literature. And for the board to have a holistic discussion, it is better to have that discussion in the measurement session. So in this case, only addressing the first two squares, our recommendation is to proceed with the 84 proposals on measurement of right of use assets and the right of use assets in kind as it was proposed in ED 84, subject to, of course, to the discussion that the board will have on the applicability of COV for subsequent measurement. Thank you.
Thank you, Jean. And I'm assuming that within that overall proposal, then we will need some basis for conclusion that essentially articulates what you've just said on consistency and responding to the point that constituents have raised. Okay, so if we have that as an instruction that we need that, and then the part 2 is cross references then into our work on the application of COV. Okay, any other points anybody wants to raise on that? Okay, that's good.
Yeah, thanks, Ian. Thanks to the board for the confirmation. So,
sorry, Lucy, I didn't see you. Your flag was behind the mic. Sorry.
Yeah, thank you, Chair. No, this is just a comment on paragraph 12A. I agree actually with the staff recommendation, but I do not agree with how it was termed that responded issues are not strong enough to warrant changing ED 84 proposal. So I think that should be softened. Thank you.
Okay, so I think that
I'll engage with Lucy during the drafting of the BCs.
Yeah.
Thank you. Yeah.
Yeah. Okay. Good. So move us on then, Jamal.
Yeah, thanks. Okay, the last agenda item. So we are now bringing the topic of linkages with IPSAS 47. Once again, it's making how to make sense and trying to answer now to Camira's question earlier in this session. So IPSAS 47 was published after the ED 84 proposal, so ED 84 couldn't have any amendments to IPSAS 47, but we did have IPSAS 23, and that's what ED 84 was proposed to amend by adding the guidance on concession on the right of use assets in kind, and also concessionary leases, the concession component. So we all know that IPSAS 47 will supersede IPSAS 23 once it is effective. So the IPSAS 23 principles are broadly consistent with principles in IPSAS 47. And actually, there is already a good example on concessionary loans. The guidance that it was in IPSAS 23 was basically carried over to IPSAS 47, of course, with changes in some terminology about conditions and compliance obligations. And other examples in terms of terms that were modified. So, and we already have a precedence here, which is with both ED 17 and 71, which included amendments to IPSAS 17. We are, when the final pronouncement was published, it carried over not only the amendments to IPSAS 17, but also amendments to IPSAS 45. So, of course, there was changes in terminology, and that's basically what we are also proposing here. Both staff and the task force are proposing to add one more section in the final pronouncement on amendments to IPSAS 47, which will be based or drawn on the principles that we've here agreed, based on the IPSAS 23 guidance. And of course, we can only bring that once the board agrees on the principles, on the amendments on IPSAS 23, and then we'll have also amendments to IPSAS 47. And in this way, we'll ensure to constituents that we have stability in the guidance and no fragmentation or time lapse between the superseding of IPSAS 23 by IPSAS 47. So the recommendation to the board from staff and task force is to add in the final pronouncement one more section of amendments to IPSAS 47 that are drawn from amendments to IPSAS 23. And as we haven't yet discussed this topic yet, because we need first to get the approval, then we can bring the discussion on conditions, compliance obligations, all that, on how we'll amend and carry over that guidance into IPSAS 47 for the December meeting. And I hope also to have answered your question, Camila. And with this, I'll open the floor to the board on the staff and task force recommendation.
Sure.
I have a question. In fact, I agree with this approach, but my question in the text, in the final pronouncement, the language is linked with IPSAS 23 or IPSAS 47, because in this moment you use in the draft you use no exchange component, but in IPSAS 47 the main concept is compliance obligation, and I would like to understand how to manage this question in the final pronouncement. Thank you.
Very good question, Patricia, but I don't have an answer. So that's part of the work that the staff and the task force will carry over on the last quarter, how to carry over that guidance into IPSAS 47 terminology, basically. And we don't, I don't know.
So just for clarification on this, because I think this was something that I tripped over when I read this. Are we proposing that we would expose the proposed amendments to IPSAS 47? Because we've only proposed and given constituents an opportunity to comment on proposed changes to IPSAS 23, which of course carries on in existence until superseded by IPSAS 47 in a couple of years' time. So I think there's just a clarification here as to what are we proposing due process-wise. You know, I mean, this is it's an unfortunate issue of the number of different moving parts that we have, but I think I just want to get clarification from staff, and then I'll go to Camira.
So I think, Ian, let us take that away and think about that issue, because I think we've got respondents who flagged this as an issue that needed to be addressed. And if we think the changes are consistent with those we've proposed to IPSAS 23, with some adjustments for points like the one Patricia just raised, which is a valid point. How do we refer to exchange, non-exchange? So we do have this issue in other standards as well. So I think let us come back with a proposal on what the changes should be and whether there is a need to re-expose them or not with a staff view, because I think it's premature until we see the nature of those amendments to make that decision today.
Okay, I think that's helpful. And, you know, just bear in mind that we're looking at, we might want to add some additional guidance anyway. So there may be, you know, and we can think about periods and that kind of thing, depending on what you come back with, if we need to have a further, you know, put something out. Camira.
Yes, thanks. And thanks, Joe, for the clarification. I just had another question. So what prevent us just to focus on IPSAS 47 and so just forget about the amendments to IPSAS 23? Perhaps it's only the difference in the effective dates between that IPSAS 43 starts on January 2025 and the other in 20, so it's 1 year gap. So another option would be to defer the effective date of IPSAS 43 by 1 year so that they are consistent in 26. So then we will avoid other problems of clarifications on exchange, non-exchange conditions and so on. So it's just an idea. Thanks.
Yeah, thanks for that, Camilo. So you are already foreseeing our further discussions according to what Ross said. So that is part of the discussion that we will have to balance whether we change effective dates or not, whether we need to re-exposure, what are the consequences. So that's something that we discuss once the board agrees with this recommendation. So that's more of a practicality, how to implement the recommendation, but it doesn't preclude the recommendation, basically. Thank you.
Okay, so I think that's been helpful in sort of elucidating the kind of the issues that we have to grapple with, and that Camira's suggestion there may actually be a very practical way through. But anyway, I'll leave it to staff to sort of worry through on exactly what this means in due process terms, you know, and obviously, you know, linking to what we've talked about earlier in terms of some additional non-authoritative guidance. Tricky. So, João, anything else you want to raise at this session? Okay, so I think that brings us to the end of the other lease type arrangements session for today. Clearly, we are ahead of the agenda at this stage, but I think given that we've already made a switch in terms of tomorrow, we're not proposing that we should move on to anything else or start any other discussion today. Ross.
Yeah, and on those lines, I don't think we're looking to waste members' times on this either. There's some discussions from this morning on finalizing documents where we would really appreciate grabbing a couple members on some of the SMCs and some of the other topics just to firm up views before we work to bring back later in the week. So we might look to grab a few members on the break for a quick chat after the break, if that's okay.
Yeah, I was going to say it's a perfect opportunity to have those discussions around SMCs and some of the other pieces of drafting. So I think with that, we bring today's formal session to a close. We will begin again at 9 o'clock tomorrow morning. We have Lee White and I think Sam Prestige from the IFRS Foundation who are joining us virtually to talk about the IPSASB's work on sustainability reporting. So we will then move through the agenda for tomorrow as advertised. Okay, so thanks very much everyone for a good first day and see you back here tomorrow morning at 9. Lynn.
Thanks, Ian. Sorry, just to hijack it a bit for the ladies in the room, we had planned an event after we finished today, so we thought we might bring that forward to after the break if people wish us to. So we'll start it earlier for those. But I'll grab, if people want to know where to go, come and see me during the break.
Okay, thank you. See you tomorrow. Have a good evening.